A sense of capital. Aloha, ladies and gents. Welcome back to a new episode of A Sense of Capital Live Earnings. Your host of today, as always, Julian, and I'm very glad to have you in, guys. Today a bit late. Sometimes it is how it is. I did some workout, showered, get fresh for you guys, get fresh for the results of the company we will cover today, which is RUBRIK cybersecurity out of the US. And yeah, just need to establish the setup here. Actually, it's the setup like always, but it always takes a moment. And yeah, so sorry for being a bit late, but not too late. I think the earnings are still, let's call it, box fresh. Guys, let me quickly check, just very quickly, if the stream is already live and if it's working. A sense of capital. Okay, that sounds great. That sounds great. Like it's working. Oh wait, I need to check one more time the sound. Was too quick. Uno momento. A sense of capital. Okay, that sounds great. Okay, sound is working too. Guys, let's not waste too much time. We want to jump into the results, but as always, a quick disclaimer at the beginning. Upcoming minutes, no advice, no consultation whatsoever, no guarantee for correctness of the provided data. So make sure you do your own due diligence, because at the end, it's your money, your destiny, and you need to live with your decision and the results affected by it. Yeah, that's very important, guys. Yeah, what is the company we'll cover today? RUBRIK, and that is actually the first live stream, the first earnings live stream I will address to this company. I'm quite new shareholder to this company, not in general new to cybersecurity companies, but new to this one, RUBRIK. Decided to actually shift from SentinelOne completely to RUBRIK because I'm quite convinced about this company and the product and the competitive situation where they are positioned in. But yeah, what is RUBRIK? You can see here the website. Jason Clinton and John Cena. So yeah, you can just see the left side of his face, but believe me, it's John Cena. What is RUBRIK? So again, it's a cybersecurity company and vendor out of the US. And it's not a data storage company. It's more like a data security and management platform, which is just using the already, most of the time at least, primarily, the existing space, data space, which is existing, for instance, cloud space from the company, and manage the existing data, primarily through recovery functions, but as well active security, of course. You can see here data protection, threat analytics, as well identity and agent security. And the classic product, let's say it like this, is RUBRIK Security Cloud. Then there's RUBRIK Agent Cloud, and there's RUBRIK Identity Security. And in all these different kind of categories, you have always some rollback recovery functions. So if through identity some shit happens, yeah, or an agent is not working on the rules, like an LLM or a bot whatsoever, and doing some mess, then you can set it back, yeah, the status from before this. Or if, of course, the classic one, there was an attack on your data, or on the brain of the company, let's say like this, on the memory and the experience level, then you can recover as well, of course. Because I'm not sure where they mention it. For sure it's mentioned here somehow, but they mentioned that 90% of the attacks, they're not coming from outside actually, so it's very difficult to secure everything, even if you work with zero trust solutions provided like Palo Alto Net by Palo Alto Networks, Microsoft, CrowdStrike, or SentinelOne, or Zscaler. But there was always this chance that through identity theft and misconfiguration, someone just enters the door with wrong identity and just gets what he wants to, yeah. And RUBRIK is the perfect answer for this, because it is this kind of vault. This is the classic example what you always hear in regard of RUBRIK. To secure the data, even that RUBRIK himself, or let's say the management itself, can't change the data, and then you can set it back, recover it after an attack, for instance. Ruben, you are there. Very nice that you are in, colleague. Too much like that Jason Clinton guy. Who's Jason Clinton? Colleague, I'm not watching too much news. Just focused on stocks, and that's it. Stocks and life and my dog. That's it. That's the good thing. And Ruben and the others, today, world premiere, first time ever. I will even we do a, how you call this? How I called it. Wait, let me check. A watch party, yeah. So I will even stream the actual webcast of the management, which addresses the earnings results. By doing this, I will make some notes. So I have a pen here and some paper. Wait, from note. So here we got it, and I will make some notes, and then I will add it to the Excel sheet. And so if everything is done later on, we have all the information. But the earnings call will already start in 20 minutes, so we really need to jump into the results, because you can see, as I mentioned, press release, the news is live, the results are here. We have the press release right here, and we have the investor presentation slide deck over here. So everything what we need for a good session right now. And if you are loyal viewer, like for instance Ruben Miranda here in the chat, very loyal one, I need to say, one of the top dogs. I always transfer in advance the information which are crucial for me, at least, into this Excel sheet, so I can evaluate them, give them a rating between negative, neutral, and positive. Yeah, that is what I already mentioned. And guys, I would say and suggest we just jump right into them. So what we start with, as always, is top and bottom line growth, so revenue and profit. What you can see here are and in general here, the results of this quarter, the past quarter, and the upcoming quarter, and the same 1 year ago, because I always try to remove seasonality and create comparison between 1 year ago and this year, for instance, or next quarter, and 1 year ago, next quarter. And by doing this, I try to create a good fundament of having the chance of giving it a rating, let's say like this. Yeah, and we start with it. And what you can see here is the forecast, which was, the consensus was roughly 366 million US dollars for this quarter, Q1 2027, or yeah, how they call it, fiscal year Q1 2027. I always call it the actual calendar year, which is Q1 2026. Yeah, I think you know what I mean, I assume, if you are invested into this. Ruben, I will check later the comments during the earnings call latest, during the webcast, and answer and whatever, yeah? So I would, as always, take care, for sure. Don't worry, colleague. But of course, keep it like Ruben, I love this. Please interact with each other. That is a good platform here to do this, yeah, and or even if you are like, correct me or address something to me, let me know if something is good or bad or whatsoever. Always open for hints and advices or feedback or whatever. Okay, let's go on. And again, we have the forecast by the analysts of 366 million US dollars. And by the guidance of RUBRIK. And I wanted to see 384 million US dollars, roughly, as you can see here. Why? Because that was would be more or less the same level of beat 1 year ago. You can see Q1 2025, the beat was 18 million, and 384 million of revenue would mean 18 million in revenue. And we achieved it for sure. Yeah, we crossed even my target. We crossed the forecast by 21 million. Overall, 387 million. So that's very strong. Very strong. Yeah. So very solid from my perspective. I mean, you expect kind of a beat at the hypergrowth company like RUBRIK, active in the space of cybersecurity. But for instance, CrowdStrike yesterday, I think not convinced that heavily, because simply the market, of course, considering as well the high evaluation of CrowdStrike, expected simply a stronger beat and raise, yeah. And I think we got this here because we have a quite strong beat, yeah, quite strong beat. You can see 39% year-on-year growth in revenue. And then when we consider the forecast, it's getting a little bit more tasty from my perspective. And don't forget, management mentioned last earnings call that 2026 will be likely backloaded, so more focus and stronger results, stronger performance in Q2, in second half of the business year, not the first one, the ongoing one. However, we can see here my target was 388 million US dollars, and that was again exactly the same difference 1 year ago. It jumped by roughly 22 million, and you can see they addressed a guidance of 396 million, so almost 400 million. 400 million in this regard is very realistic that they cross it already next quarter. I think that's quite strong. That's for sure a beat, and that already makes it easy because the current revenue is good. The future revenue is solid, very solid. You can see expected revenue growth, outlook to outlook, let's say like this, forecast to forecast, is more than 40%. So not that difficult for me to leave here a positive rating, for sure not. And then we have profit side, like guys, and I think that looks juicy as well. At least that is my experience when I entered the data and my memory. And you can see here forecast was minus 3 US dollar cents, and yeah, they achieved 0.16 US dollar cents. So quite a strong beat. I mean, not that crazy special, because you can see here 1 year ago as well a beat of 0.17 US dollar or 17 US dollar cents. Yeah, but still a beat. I mean, my target was to get something like 7 US dollar cents, and they have 16 US dollar cents. So really strong beat from my perspective. Very, very solid. I mean, again, consider that this company currently at the stage, it's not about making money, so profit. I mean, of course, generating free cash flow, this kind of stuff's always very supportive and should be the case. And we want to see some kind of tendency in terms of getting profitable. But if that's not currently the case, then it is how it is. So that's positive. Now let's go on, and you can see or recognize maybe that I'm quite talking quickly, because in 13 minutes, 13 minutes, the webcast starts. So yeah, we are a bit in hurry, but however, I try my best. And if it's not finished till this point in time, we cover it later after the webcast and finalize it together. So forecast looks as well quite juicy. So I want to see something like still negative, but close to the neutral line of 0 US dollars. So in this case, minus 2 US dollar cents. And that is as well this kind of development here, roughly. And what they provided us is 4 US dollar cents. So you can see past year, it went down actually the forecast by 2 US dollar cents, and now it went up by 7 US dollar cents. So profitability as well for me, very, very solid and positive. And that is already a good fundament for a total rating of positivity. But let's see what is going on in terms of the details, the more company specific and business specific details. And we start with the net revenue retention, or NRR. I mean, you know, there's gross revenue retention and net revenue retention. Gross revenue retention is just without upselling or cross-selling. So basically, you have existing customers, you're keeping your hands still, your sales team whatsoever, and how many stay at the end of the year, and how much revenue you achieve with the same customers after 1 year without doing anything. That's gross. And net means upselling, cross-selling is included. So you provide more product categories, more modules, for instance, and you try to do upselling, which means you sell more of one product category. In this case, it is very likely data consumption, yeah? Because again, it's a data security management platform, which which works with the data, and the prices increase based on the data consumption, let's say like this. And in the past quarters, we always had more than 120%, and now they mentioned just 120%. Let me check this quickly if that's really the case, but I think it is the case. So we go down. I hope that's the current sheet, but it is, yeah, and you can see here now it's on point 120%. And that's for sure very, very high, especially in the cybersecurity space. Not sure if there's any company operating on the scale of RUBRIK with this NRR. Very, very strong. I mean, there's only a bunch of other SaaS companies, software companies, or data companies like Snowflake, for instance, which are working with this kind of NRR. So it's still very, very, very strong, but you can see it's unfortunately lower than before. And I need to be strict here. I would love to see that it is still more than 120%, but it is not the case, and therefore I leave it a negative rating, even though the absolute number is still quite strong. But the jump from more than 120% to down, I don't like that much actually. Yeah. Okay, now we're coming to the core number, let's say it like this. Even more important likely than revenue, because we talk about a SaaS company, and that's annual recurring revenue. And you know that those are the secured flow of revenue, yeah, which you cover with subscriptions, with signed contracts, yeah. And this is the pipeline at the current point in time. Let's say at the current point in time, a few days ago, because we're already in Q2. Yeah, so at the end of Q1, obviously. And we can see it's 1.56 billion. Looks quite solid. It's a good jump. And you can see past quarter it went up by 33%, 34%, and now 33%. So it's a bit lower year on year. You can see, so past quarter, Q4 2025 to Q4 2024, that was 33.6%, and now Q1 2026 to Q1 2025, so 1 year ago, is 32.6%. This is how I always compare it here at the live earnings stream. And you can see it is lower by 1%, but that is just very natural. Obviously, we would love that it somehow accelerates. But if that's not the case, the level is still quite high, yeah? And it's just very natural that it's getting lower and lower. And just 1% down is okay. I think it is okay from my perspective. And I leave it a neutral rating, therefore. It's for sure an all-time high. And you can see when we see net new ARR, so the difference between past quarter and the current quarter, it's 105 million. Yes, it's lower than the quarter ago, for instance, but it's the second highest in company history with 105 million US dollars on top. And you can see 1 year ago, it was, even if the year-on-year growth was stronger, it was just 87 million, and now it's 105 million. Yeah, so roughly 18 million more. And that's nice to see that the net new ARR is kind of a record, yeah, for Q1. That's great. Customers, we will see. I need a little bit more data, which I likely get out of the webcast, which starts in 7 minutes. Then I can add this later on. We can discuss this. But what is another important number in terms of the customer fundament is the 100,000 plus US dollar ARR customers. So really the more essential, healthy, and value-adding ones. Very classic number in the space, and or KPI. And you can see past quarter, it was up by 25%, and now it's up roughly by 24%. This number, I really love that customer base is growing. For me, it's very, very important because it shows customers are happy. It shows that that they are very competitive. Yeah, they're winning a lot of projects, and I think the CEO mentioned past earnings call that they win 90% of the projects where competitors are involved. So I would love to see this actually higher. Yeah? And of course, that shows again how strongly they transform maybe smaller customers to larger customers. So it is not specifically weak, 24%, for sure not, I think. And 3,000 customers as well. Large customers is not weak, but it could be better. It could be better. Yeah. Let me check quickly, just quick math. I want to see if that. Oh. Okay, that's nonsense what I did. Forget what I did. But yeah, that's for me hard rating actually. Not that easy like the others before. And I will leave here. Whew, that's a tough one. I would say neutral rating because roughly 1% down quarter on quarter. Again, it's a bit like with ARR, it's not worse. But still, I would love to see it's above 20% for a few more quarters, and I hope they can keep this momentum somehow. Other numbers are not existing at the moment. Very likely we get them during the webcast. Again, I will watch this together with you guys. A lot of you have asked in the past for it if I stream live the webcast today. First time I will do this, especially for you. I never thought it's a good idea and it's much value, but the more I talked about it, then my opinion was really okay. Might make sense, guys. Might make sense. So let's go. So we come later to those numbers. So far, actually, the details not looking that juicy. Yeah, top and bottom line growth looks way better than the details so far, even if the details are not worth. Let's check out what is going on with profitability. So we have the gross margin on a GAAP base, very classic number, as you know, and you can see it was already higher. I mean, yes, you can see past quarter 4% year-on-year growth, now 2.2% year-on-year growth. It is the second largest, basically, with 80.5%, but we don't want to see it's getting down. At least I personally don't want to see it's getting down. Yes, again, it's a bit backloaded this quarter. The profitability will very likely, way strongest takes place later on. However, I don't want to see it's going down, so I leave here red rating, negative rating. I need to be strict, guys. This is how it is. And then we have subscription ARR contribution margin, and I actually never heard before RUBRIK about this KPI, and I checked it. Yeah, and it means, or what is included is the ARR minus the cost of goods sold, the goods which have been sold, the products. So cloud infrastructure support, customer onboarding, and sales commission. Those costs, yeah, costs of the goods which have been sold. This gets deducted from ARR plus, or another position which gets deducted is the sales and marketing costs, yeah, and that gets all together divided by ARR, yeah. And I checked it, so a high contribution margin is 30% plus, is very, very strong, and that basically means that there is a scalable model with efficient customer acquisition, because again, you use ARR and you deduct cost of goods which have been sold and the sales and marketing costs. Yeah, so it is reasonable that in this case it's about acquisition efficiency. So again, 30+% is good, but we are still on the way up, let's say like this. And you can see it's 13.2%, so it's not at 30%, but obviously that takes time, and they are in a growth stage. And you can see last quarter it went up by 10%, now only by 5%. But yeah, I mean, look, 1 year ago, and check out 1 year ago. This is Q4 2024, and this is Q1 2025. Yeah, so you can see it went already up 6%. Yeah, so that is already quite a jump, you know. And then having the base from 8 to 13% obviously is just roughly 5%. It's not that easy to have this kind of developments anymore. I think it's still an all-time high. I think it's the third double-digit number, and by far the strongest one, and they developing in the right direction. You can see, for instance, 1 year ago, yeah, I would say it's neutral. It could be better, yeah, this margin, but again, it doesn't count too much for me, but could be better. Guys, give me just a quick moment. I try to make the webcast happening. I hope it's working, guys. I hope it's working, man. I didn't have that much chance to check it in advance, and I'm not a really nerdy, professional, technical guy. So, yeah, just give me quick chance of focusing it. So I'm just currently logging in my inbox. hope I find the link. I got the link, I think. So no, you have to visit the following. Webcast link is this. Oh, guys, wish us luck. Can we play some lobby music? Let us check if it's working. Yeah, guys, and I hope, hey, Raraza, now it starts. We are right on time. I hope it's working. Wait, guys, need feedback.
Hello, everyone. Thank you for joining us, and welcome to the RUBRIK
Is it working? Do you hear me double? Do you hear anything?
2027 results conference call. After today's prepared remarks, we will host a question and answer session. If you would like to
don't
ask
leave
a
me
question,
alone. Give me
please
feedback.
press *1 to raise
Thumbs
your hand.
up or down.
To withdraw your question, press *1 again. I will now hand the conference over to Melissa Franke, Vice President of Investor Relations. Please go ahead.
I hear something. That is what I can tell.
Hello, everyone. Welcome to RUBRIK's first quarter fiscal year 2027 financial results conference call. On the call with me today are Bipul Sinha,
Echo even if when I'm not talking or only when I'm speaking?
And Kiran Chowdhury, Chief Financial Officer. Our earnings press release was issued today after the market closed and may be downloaded from the investor relations page at www.ir.rubrik.com. Also on this page, you'll be able to find a slide deck with financial highlights that, along with our earnings release, includes a reconciliation of GAAP to non-GAAP financial results. These measures should not be considered in isolation from or as a substitute for financial information prepared in accordance with GAAP. During this call, we will make forward-looking statements, including statements regarding our financial outlook for the second quarter and full fiscal year 2027, our expectations regarding market trends, our market position, opportunities, including with respect to generative and agentic AI, growth strategy, product initiatives, and expectations regarding those initiatives, and our go-to-market motion. These statements are based on what we believe today, and actual results may differ materially. These forward-looking statements are subject to risks and other factors that could affect our performance and financial results, which we discuss in detail in our filings with SEC. RUBRIK assumes no obligation to update any forward-looking statements we may make on today's call. With that, I'll hand the call over to Bipul.
Thank you, Melissa, and thank you all for joining us today. We are off to a strong start to fiscal 2027 with a record Q1. I'm proud to announce that we have once again exceeded all guided metrics across top line and profitability. Here are the 5 key numbers. First, subscription ARR reached $1.57 billion, growing 32% year over year. Second, our subscription revenue was $374 million, growing 41% year over year. Third, our subscription NRR remained strong at approximately 120%. Fourth, customers with 100K or more in subscription ARR reached 2,946, growing 24% year over year. And finally, on profitability, we once again made material improvement in subscription ARR contribution margin, up over 500 basis points year over year. We generated $74 million in free cash flow this quarter. Let me start with a few observations. We are now in a new era of cybersecurity. Today, AI agents are attacking us. These autonomous agents can intrude, breach, and encrypt at machine speed. Mythos was a powerful wake-up call for the cybersecurity industry, but it is already something of the past. Better, faster model versions are already in development. Mythos has proven that attack detection is near impossible, and cyber resilience is now the most fundamental cybersecurity requirement for the AI era. In fact, Mythos is driving more customer conversations around cyber resilience and recovery, and that is one of the reasons why we have raised our top-line guidance for the rest of the year. And at the same time, AI agents are increasingly running business processes, workflows that assume identities, access sensitive data, and take autonomous action. Once compromised, these agents can potentially inflict 10 times more damage in 1/10 of the time. As you can see, both threat actors and business operators are now agentic. This is not about instilling fear. This is about helping institutions be better prepared and putting every effort in staying ahead of the new cyber risk that could dramatically affect their operations. As I mentioned before, in this new cyber reality, prevention and detection are no longer enough. What you will need, in addition, is preemptive risk assessment, real-time guardrails, and machine speed system remediation. In short, agentic cyber resilience. Rubrik has led in cyber resilience for years, delivering machine speed cyber recovery for thousands of businesses around the world. That work helped us build for AI agents and have full awareness that technology leaps like Mythos were on their way. While this may seem grim, we believe Rubrik is and will continue to be the answer to helping institutions stay ahead. Along these lines, Rubrik recently joined Anthropic's Project Glasswing and received early access to the Claude Mythos research preview, putting the new model to work directly to ensure we can serve our customers better when cyber breaches inevitably happen. This partnership aligns to our vision of agentic cyber resilience, defending a world where AI agents are both the cyber attacker as well as the business executor. It is clear that cyber resilience is now the most fundamental cybersecurity strategy for the agentic era. Let me talk about why our products are transformative. We are a multi-product company built on a unique and differentiated platform that solves the most consequential problems across data, identity, and AI. On top of this platform, we deliver two solution suites, Rubrik Security Cloud for cyber resilience and Rubrik Agent Cloud for trusted, accelerated AI transformation. Let me start with Rubrik Security Cloud, or RSC. Our platform has the unique ability to bring together time series data and metadata across complex enterprise environments spanning on-premises, sovereign, cloud, SaaS, and identity providers. We believe our depth and breadth of enterprise context is unmatched by other solutions in the marketplace. This architectural advantage allows us to deliver our proprietary preemptive recovery engine, which continuously pre-calculates clean points of recovery across data and identity before an attack occurs. The preemptive recovery engine is the backbone of Rubrik Agentic Cyber Resilience. Our RSC platform orchestrates resilience continuously and proactively, not reactively, post-breach. This is how we deliver record-fast recoveries when our customers are breached or agents get compromised. And this is why we continue to grow while the competition has stalled. There are many examples I can talk about, but let me just share two specific customer examples of legacy replacement in very large enterprises. First, a large UK public sector organization chose Rubrik this quarter to fully displace a decade-long legacy incumbent across on-premises, cloud, NAS, and identity workloads. Outcompeting several legacy and new-gen vendors, Rubrik was recognized for delivering comprehensive cyber resilience across every workload. With Rubrik, this customer can consolidate a fragmented environment of 400 plus legacy backup policies into a single unified platform. Second, A global 2000 insurer chose Rubrik this quarter to displace a legacy incumbent and native cloud backup across their full enterprise footprint, including on-premises and cloud workloads. Rubrik was selected for our single pane of glass across all key workloads and for our ability to deliver demonstrable cyber recovery readiness, unmatched by incumbent and competitive alternatives. The cyber resilience market is consolidating around platforms, not point solutions. When CIOs and CISOs rationalize their vendor portfolios, Rubrik wins because we deliver complete cyber resilience across on-premises, sovereign, cloud, SaaS, and identity in a single unified architecture. This is because Rubrik is built on the principle of complementary network effects. What that means is every new product we build makes every other product on the platform more powerful. So when a customer adopts Rubrik, they are not just buying a solution, they are stepping into an ecosystem. For example, when a Rubrik data protection customer adopts Rubrik's identity resilience product, they not only achieve cyber resilience across data and identity, but also gain a complete understanding of the blast radius and characteristics of a cyber attack across data and identity through the Rubrik platform. This is the additional platform value. Customers do not simply use Rubrik, they rely on it to deliver resilient, minimal viable business. And the more they use it, the more indispensable it becomes. That is the value creation that endures. Now let's talk about our identity business. Our identity solutions continue to gain momentum as the rise in identity-based attacks has increased the need to protect both data and identity simultaneously. Identity continues to be highly successful in garnering budgets from CISOs, extending Rubrik beyond our traditional CIO and CTO buying personas. We have been rapidly disrupting the identity protection market with our identity recovery and resilience products. In fact, our identity business grew 38% sequentially quarter over quarter to reach over 50 million in subscription ARR in Q1. Let me give you a representative identity win. A large US agricultural organization and existing Rubrik customer expanded into identity resilience this quarter. They added Entra ID and Okta protection after a ransomware attack on their Active Directory environment. That attack created significant operational downtime and financial loss while also exposing critical cyber resilience gaps. The customer chose Rubrik's identity resilience as the cornerstone of their identity modernization initiative. Now, let's talk about how Rubrik accelerates trusted AI transformation with Rubrik Agent Cloud. As we have said before, while agents promise 100 times more productivity, they also introduce 100 times more risk. Agents breaking existing controls, agents tricked into leaking confidential information, agents deleting entire code bases, these kinds of events are becoming more common. If agents assume your identity, access your sensitive data, and take real-world action, who governs them? It's clear that while AI gives you a better, faster car, you need an intelligent, autonomous driving system for control to steer, change lanes, and brake safely. We believe enterprises need a comprehensive AI operations platform that can dynamically monitor, control, and remediate agentic actions. You need to have visibility into what agents, sanctioned or unsanctioned, exist in your environment and what they are doing. You also need real-time guardrails to dynamically authorize agentic interactions that comply with your company's policies and industry regulations. If agents get compromised or hallucinate, then you need a rewind button to undo destructive actions. That is why we designed Rubrik Agent Cloud. the comprehensive AI operations platform. This is the intelligent autonomous driving system that we provide so customers can safely drive fast with AI agents. Our Predibase acquisition, which developed a LLM fine-tuning and inference serving platform, provides the AI firepower required to dynamically govern agentic interactions. This technology underpins our semantic AI governance engine, or SAGE, which is the industry's first AI governance engine purpose-built to guardrail autonomous agents in real time. By leveraging AI to control agentic work, agents can't leak sensitive data, can't say the wrong thing, and can't take the wrong action. AI controlling AI agents is key. We believe that understanding intent is critical to controlling probabilistic agents at scale. In just one quarter of selling, we are already seeing early POCs convert to production deployments. The next example is a critical evidence of the customer interest in this product. A US financial services firm, an existing RUBRIK customer, committed to RUBRIK Agent Cloud this quarter, moving from AI experimentation to full production deployment across AWS Bedrock and Microsoft Copilot. The customer chose RAG for its unified visibility and monitoring of AI agents across all platforms, policy-based guardrail controls, and ability to rewind and remediate agent actions, which they identified as the essential capability for scaling AI safely in a regulated environment. In closing, I leave you with 3 takeaways. First, RUBRIK is winning the cyber resilience market across data and identity. In the age of mythos and frontier AI models, cyber resilience is paramount for cybersecurity, which is why thousands of customers rely on our unique architecture and platform depth. Second, we continue to grow while the competition has stalled. Our unique solution at the convergence of data, identity, and AI positions us to solve cyber resilience across all 3 domains. Third, we are establishing RUBRIK as the data and identity infrastructure platform for the AI era, with a platform for agentic operation and resilience that no competitor can match. While the world is going through the AI transformation, we are steadfast in helping our customers embrace that transformation with a greater degree of confidence. That is why we are extremely optimistic about the future of RUBRIK. Having said that, thank you to all our shareholders for your trust. We are just getting started in this new era. We look forward to seeing some of you at our Analyst Day on June 10th in Las Vegas, where we'll unpack our vision for agentic cyber resilience. And lastly, to the entire RUBRIK team, thank you. Your work made these results possible. I couldn't be happier with our first quarter results, and I'm excited about what's ahead. With that, I'm pleased to pass it to our Chief Financial Officer, Kiran Chaudhary.
Thank you, Bipul. Good afternoon, everyone, and thank you for joining us today. We had a strong Q1, exceeding all of our guided metrics and demonstrating continued execution in the large and growing cyber resilience market. We are pleased with our solid start to fiscal year 2027 and are raising our outlook for the year. Let me start by briefly recapping our first quarter fiscal 2027 financial results and key operating metrics, and then I'll provide guidance for the second quarter and full year fiscal 2027. All comparisons, unless otherwise noted, are on a year-over-year basis. We are very pleased to have ended Q1 with subscription ARR of $1.57 billion, growing 32% year-over-year. We added $103 million in net new subscription ARR, a record for Q1. Continued adoption of RUBRIK Security Cloud resulted in $1.39 billion of cloud ARR, up 43%. We are at the tail end of our cloud transition, with cloud ARR now representing 89% of subscription ARR as of Q1. We did not see a material impact to our business from rising hardware costs or supply constraints. As a reminder, we are in the business of selling software either in the cloud or self-hosted. Moving along, our differentiated land and expand model benefits from multiple avenues to gain new customers and grow our footprint after the initial contract. Expansion occurs through data growth in existing applications, securing more applications or identities, adding more security products, or adding RUBRIK Agent Cloud. As a result, we continue to see a strong subscription net retention rate, approximately 120% in the first quarter. We are very proud of the high customer retention and expansion dynamics of our business. All vectors of expansion are healthy contributors to our NRR, highlighting the meaningful runway we have to more deeply penetrate our customer base. We ended the first quarter with 2,946 customers with subscription ARR of $100,000 or more, up 24%. These larger customers now contribute 88% of our subscription ARR, continuing to grow as we become an increasingly strategic partner to our enterprise customers. Customers with subscription ARR of $1 million or more grew over 50%. For our first quarter, subscription revenue was $374 million, up 41%. Total revenue was $387 million, up 39%. Revenue in Q1 primarily benefited from our strong ARR growth. Material rights related to our cloud transformation contributed approximately $8.5 million to revenue in the quarter, a substantial reduction compared to the prior quarter, reflecting the near completion of our cloud transition. Revenue normalized for material rights increased 43%. Turning to the geographic mix of revenue, revenue from the Americas grew 38% to $279 million. Revenue from outside the Americas grew 43% to $108 million. Before turning to gross margins, expenses, and profitability, I would like to note that I'll be discussing results on a non-GAAP basis going forward. Our non-GAAP gross margin was 82.9% in the first quarter compared to 80.5% in the year-ago period. Our gross margin benefited from the revenue outperformance, greater efficiency in our cloud hosting costs, and the improved productivity of our customer support organization. As a reminder, we look at subscription ARR contribution margin as a key measure of operating leverage. We believe the improvement in our subscription ARR contribution margin demonstrates our ability to drive operating leverage and profitability at scale. Subscription ARR contribution margin was 13.2% in the last 12 months ended April 30th, compared to 8% in the year-ago period, an improvement of over 500 basis points. The improvement was driven by higher sales, the benefits of scale, and improving efficiencies and cost management across the business. Free cash flow was $74 million compared to $33 million in the first quarter of fiscal 2026. The increase was driven by higher sales and improved operating leverage. Turning to our balance sheet, we ended the first quarter in a strong cash position with $1.7 billion in cash equivalents, restricted cash, and marketable securities, and $1.1 billion in convertible debt. Let me now provide some context on our guidance. We are confident in our outlook, fueled by our robust cyber resilience market, our differentiated technology platform, and the scaling of our identity resilience and RUBRIK Agent Cloud offerings. This momentum, coupled with our consistent and effective execution, positions us to achieve strong subscription ARR growth ahead. We plan to continue making operational investments across two key areas. First, we will continue to invest in R&D to accelerate innovation in the large but developing markets of data, security, and AI. Second, we will invest in our go-to-market, specifically targeting regions and verticals that offer the most attractive ROI. These go-to-market investments will also focus on scaling our newer innovations, including our identity resilience platform and RUBRIK Agent Cloud. Now turning to our guidance for the second quarter and full year fiscal 2027. In Q2, we expect revenue of $395 million to $397 million, up 27 to 28%. We expect material rights related to our cloud transformation to contribute $3 to $4 million to revenue in Q2. We expect non-GAAP subscription ARR contribution margins of 11 to 12%. We expect non-GAAP EPS of 3 to 5 cents based on approximately 224 million weighted average shares outstanding. For the full year fiscal 2027, we expect subscription ARR in the range of $1,854 million to $1,862 million, reflecting a year-over-year growth rate of approximately 27%. We expect total revenue for the full year fiscal 2027 in the range of $1,638 million to $1,648 million. As a reminder, in fiscal 2027, the substantial reduction in material rights revenue will represent a meaningful headwind to our reported revenue growth. We expect material rights related to our cloud transformation to contribute approximately $17 million to revenue for the full year. Revenue growth normalized for material rights is expected to outpace our subscription ARR growth rate. As we have communicated, subscription ARR is the primary top-line metric to evaluate our business performance, as it is not impacted by accounting dynamics related to our cloud transformation. In terms of profitability, we will continue to stay focused on taking advantage of the market opportunity in cybersecurity and AI while balancing growth with improved efficiency. Based on our current investment plans, we expect non-GAAP subscription ARR contribution margins of approximately 14% for the full year fiscal 2027. We expect non-GAAP EPS of 25 to 35 cents based on approximately 228 million weighted average shares outstanding for the full year. We expect free cash flow of $293 million to $303 million. As always, we have included additional modeling notes in our investor presentation. In closing, we are pleased with our strong start to fiscal year 2027 and remain confident in our ability to deliver durable and efficient growth as the market leader in cyber resilience. We look forward to sharing more about our opportunity and strategy at our upcoming Analyst Day at our Forward User Conference. With that, we'd like to open up the call for any questions.
We will now begin the question and answer session. We ask that you please limit yourself to one question. If you would like to ask a question, please press *1 to raise your hand, and to withdraw your question, press *1 again. For optimum sound quality, please pick up your handset when asking a question, and if muted locally, please remember to unmute your device. Please stand by while we compile the Q&A roster. Your first question comes from the line of Saket Kalia with Barclays. Your line is open. Please go ahead.
Okay, great. Hey guys, thanks for taking my question here. I'll keep it to one. Bipul, maybe for you. Can you just dig a little bit more into how the dynamics of the hardware market are potentially impacting customer buying behavior in the cyber resilience market? It's just been such a key question through the quarter. I'd love to get your perspective so we're all on the same page.
Thanks, Saket. Good to hear from you. To start with, RUBRIK has no real impact from the hardware market dynamics. As you might reckon, RUBRIK is a software company, and moreover, the enterprise data protection part of our business is a relatively smaller part of our business now that we have cloud, SaaS, identity, M365, and a number of other solutions that RUBRIK sells. And if you look at our customers, they are holistically looking at cyber resilience across all these platforms because cyber attacks are not choosing just the data center or just the cloud. So we sell a comprehensive solution, and as a software company, we have, again, RUBRIK has no real impact on the hardware dynamics.
And just to add for what Bipul said, Saket, I wanted to emphasize that this is the same message as of last quarter too, no material impact. And the sales cycles of the past few quarters have been stable, even with this dynamic in the broader environment. We remain confident on our outlook based on what we see in our pipeline and our multi-product platform motion.
Super helpful, guys. Thank you.
Your next question comes from Matt Martino with Goldman Sachs. Your line is open. Please go ahead.
Hey, good afternoon. Thank you guys for taking the question. Bipul, you've described a world where AI makes everything more dangerous, more data, more agents, more surface area to cover. If that's the arc, does cyber resilience become a bigger line item in the enterprise over the next couple of years? And does Rubrik's role start shifting from an insurance policy to something more central to how companies actually run? Curious to see how resilience is evolving as the enterprise goes fully agentic. Thank you.
Thanks, Matt. What I'll say is cyber security strategy has moved from being a prevention detection-oriented strategy to squarely now as a cyber resilience strategy. And what Mythos and other frontier AI models have done, they have accelerated this transformation because with Mythos, cyber detection is almost impossible. So as soon as intrusion happens, breach will happen. And as Gartner also sent out note to all the clients that the real answer to Mythos is a cyber resilience is a must. And preemptive technologies have to be explored both for patching as well as cyber recovery. And if you look at Rubrik, call it vision, call it luck, call it right time, right place. 2 years ago, we launched something called preemptive recovery engine, which does all the work of cyber recovery in the peacetime before attack happens, so that when attack happens, you are ready to recover at AI speed. In this new era of AI, Mythos, and AI-powered attacks, recovery at AI speed is critical. And Rubrik has a unique technology to deliver that for our customers. In fact, our vision is attacks will be continuous and recovery has to be continuous. So at any given point in time, you have to be ready to recover at AI speed. And that's what our preemptive recovery engine delivers. That's what we are educating our customers on. And if you just look at what has happened post-Mythos, I have personally done 140 CIO and CISO meetings in the last quarter. That is up 50% sequentially quarter over quarter. Cyber resilience is the only cybersecurity strategy that is viable for the AI era. We created the cyber resilience category, and we are taking our customers on this agentic cyber resilience journey.
Thank you. Very clear.
Thank you, Matt.
Your next question comes from Brad Zelnick with Deutsche Bank. Your line is open. Please go ahead.
Oh, great. Hey, guys. Congrats on a really nice start to the year. Bipul, my question for you, and I know we're going to dive into it next week at Forward, so I'm looking for the expanded version, but maybe just for today, and it speaks to a lot of the comments you've already made. You know, we've heard competing claims from vendors across the security and IT stack over who has the right to win as the AI control plane. Why does Rubrik stand to be a leader in this category against vendors like ServiceNow, for example, where we've heard convincing arguments that agentic control is a CMDB problem at its core?
Thanks, Brad. Here is what I'll tell you. Delivering a comprehensive agentic security and resilience requires a comprehensive platform. Just doing observability on agents is not enough. Just doing posture management on identity for agents is not enough. Just doing real-time, runtime, agentic security guardrail is not enough. Because when all of these things fail, you need to also deliver fundamental agentic rewind so that you can bring your systems back into a clean state and continue operating with other agents. And Rubrik has a comprehensive platform to deliver to each one of these aspects, from monitoring to security controls, real-time security to agent rewind. And we believe that we have the most comprehensive solution to sell in this marketplace. And that's why we are seeing a strong customer interest in our Rubrik Agent Cloud solution. Let me give you an example. A financial services company adopted Rubrik Agent Cloud this past quarter. This particular company was very slow in adopting AI because of their concerns around compliance, governance, and security. And moreover, they were worried about what if the agent bypasses all of this and does real damage. How do I bring the systems back into order? With Rubrik Agent Cloud, we deliver not only the fastest way and safest way to deliver security and compliance rollout, but with Rubrik Agent Rewind, they saw this as a must-have capability that should the agents skip those steps because of hallucination or otherwise, they have peace of mind that they can also deliver Agent Rewind. So I will repeat, Rubrik delivers monitoring, guardrail and security for runtime, as well as Agent Rewind. We have the most comprehensive solution in the marketplace, unmatched by any other vendor.
Very, very clear. Thank you for that, Bipul, and look forward to seeing you out in Vegas.
Thanks.
Thank you, Brad.
Your next question comes from John DiFucci with Guggenheim Securities. Your line is open. Please go ahead.
Thank you. Nice job on this. I don't always say that, but it really your results here were strong, and subscription ARR was what we thought you could do, which is sort of like the scenario we sort of think maybe they can do it. However, the mix was different than we thought we'd see, with on-prem better than what we expected and cloud a little bit below what we expected. I was just wondering if you could talk about the dynamics of that and how we should think about it going forward.
Sure, John. That's Kiran, and I can take that. So overall, we're very pleased with the quarter. You saw the results, and both pleased with both the cloud portion as well as the non-cloud portion. This quarter, we were at 89% cloud. I think if you're looking at the growth rates for cloud ARR year over year, one thing I just want to remind that now we are nearing our end of our transition. Last Q1, we had 82% cloud as percentage of sub ARR, and we're 89%. If you actually back out the migrations, then we actually grew cloud ARR a little bit faster than subscription ARR. So it was a very strong quarter. At the same time, non-cloud ARR also grew. You've seen that on a dollar basis. And that's because we are nearing the end of our migrations as well. So we had a strong quarter there as well. So just wanted to clarify that.
That's actually really helpful, Kiran. Thank you for reminding us of that. How should we, same question, on the non-cloud stuff, as we think of that going forward, how should we think about that? Thank you.
When we talked about it the past few quarters, there were declines quarter by quarter as the migrations were still continuing, but we had talked about a time at some point it stabilizes and then there is growth from there, because there's a very small but meaningful business there of selling our software to customers who are self-hosted, especially in the three-letter agencies, government, as well as regulated industries. So we're at that point right now where we expect it to grow, but obviously there could be some quarter-to-quarter variance. There's a little bit migrations left as well, but generally, I would say over the multi-quarter period, the trend line is upward.
Great.
One thing I'll add to this, John, is what we are seeing also is an interest in Europe and Middle Eastern countries around sovereign infrastructure, and which is nothing but an environment that is controlled by the customer, and call it as a non-cloud solution. So if that trend continues because of geopolitics, data locality, sovereignty, we might see again increase in non-cloud portion. But as Kiran said, it will first stabilize and then it might grow.
All really helpful. Thank you very much. Nice job, guys.
Thanks, John.
Thank you.
Your next question comes from Eric Heath with KeyBanc Capital Markets. Your line is open. Please go ahead.
Great. Thanks for taking the question. I wanted to maybe follow up on Brad's question in a slightly different way, but Bipul, the early customers that are adopting the Rubrik Agent Cloud, who are you competing with there? I mean, as Brad kind of alluded, there's lots of vendors coming at this from every angle trying to secure agents, whether that's the identity endpoint or elsewhere. So just curious what that competitive landscape is and why the Rubrik angle is resonating with customers thus far.
No, it's a really insightful question. Like whenever a new market or area starts, you have lots of different approaches that people bring. And as Brad mentioned, you have larger companies that are coming into this market from observability angles. You have startups coming into this market from identity angle. You have companies starting in this market through just giving the posture management, or some companies are looking at it from the shadow IT perspective. But what we are hearing consistently from our customers is that they do not want point solutions. They do not want to stitch together 5 solutions to create full agentic security. And it is not dissimilar to what happened in the cloud security. Remember, in the cloud security, you had 5 or 6 different companies coming in with 5 or different parts of the market, and then Palo Alto and later Wiz consolidated with a platform solution end to end. And we believe that from observability to identity posture to real-time security to the rewind, which is undoing of the agentic action that is not desirable, has to be delivered in a single platform in an end-to-end solution. And that's where we see our unique advantage because of the previous acquisition. We have the best runtime AI guarding agent solution combined with Rewind, which is our heritage in the Rubrik backup, plus the observability through our proxy and gateway. We believe that we have the most comprehensive solution. And because of our comprehensive nature of the solution and end-to-end security compliance plus Rewind, we are winning deals.
Makes a ton of sense. Thanks, Bipul.
Thank you, Eric.
Your next question comes from Greg Moskowitz with Mizuho. Your line is open. Please go ahead.
Great. Thank you very much. And nice job on the quarter. Bipul, this is perhaps not a very easy question to answer, but you have 2 really exciting initiatives with identity recovery and resilience, and of course, Rubrik Agent Cloud. If you were to look out over the next 2 to 3 years, which opportunity do you personally think is the larger one for Rubrik?
Obviously, AI market is going to be very, very massive. And Rubrik Agent Cloud is the linchpin for our customers to succeed in delivering trusted agents at a scale. So that is definitely a massive opportunity. Having said that, identity is both a risk and enabler to enterprise agents, because identity-based attacks have become the norm, the number one attack vector. And should an agent get compromised, you have massive insider attack. So identity is paramount. And then on the other side, identity and data interaction is core to agentic security, because agent assume identity and take autonomous action on sensitive data. And that is the reason that we believe Rubrik is uniquely positioned to win in this market, because Rubrik's heritage is data. Now with identity, particularly identity resilience, both posture and recovery, we have created over 50 million ARR business in just 4 or 5 quarters. We grew 38% sequentially between Q4 and Q1. Q1 typically is the start of the fiscal year. And because of this data and identity strongholds that Rubrik has, it uniquely positions us with the previous acquisition to create this platform. So we are very excited about both of these opportunities. They are intertwined. They reinforce each other. And it actually enables us to have conversation outside of our traditional core, which is CTO and CIO organization, to have conversation with CISO organization, with the identity teams. And as you know, agentic rollout and security and compliance also sits at the intersection of CTO and CISO organizations. So in many ways, we are positioned with our buyer in the right way. We have the right platform and technology to deliver the solution in the right way. And most importantly, we have the most comprehensive platform for our customers to do end-to-end agentic security, compliance, as well as rewind.
Really helpful perspective. Thanks for that, Bipul.
Thank you, Greg.
Your next question comes from Jason Adder with William Blair. Your line is open. Please go ahead.
Yeah, thank you. Good afternoon. So for Rubrik Agent Cloud, can you talk about the sales strategy there? Is it mostly cross-sell? Is it a lot of new customers? Is there an overlay organization? Just wondering, is this the same kind of sales reps that are selling Agent Cloud as are selling the Security Cloud?
So, Jason, as you might recall, Rubrik has two teams to take our products to market. One we call forward team, and their job is to amplify our current successes. And then we have a lateral team that incubate new products into the marketplace and scale it before handing it over to the forward team. So we have incubated data security products, our enterprise edition through this team, M365 through this team, cloud security through this team, identity resilience through this team, and now the same team is actually taking the Rubrik Agent Cloud into the market. So this is a separate team. They actually take new products, figure out the product market fit, figure out the messaging, get the initial customer scale, and that's the team that is focused on selling Rubrik Agent Cloud, because lingo is different. Again, what customers are buying this product for, the use case is different. Many customers are interested in this product that is outside of the Rubrik core customer base. Many of our existing customers are interested in this product. This is a very exciting time for this team. Again, new product, early go-to-market, but there is a significant interest and market kind of awareness that without a proper agent security governance rewind platform, they can't really roll out agent with the proper permission without the confidence.
Thank you.
Thank you, Jason.
Your next question comes from Todd Copeland with CIBC. Your line is open. Please go ahead.
Yeah, good evening, everyone. I had a Agent Cloud go-to-market question as well. To augment your incubator team, can you imagine creating partnerships, with some of the larger players in this market to accelerate enterprise take-up? And on top of that, will this take as long, or will it be shorter to get to that 50 million mark that you saw on the identity side? Thanks a lot.
Thank you, Todd. So let me start with this question. Obviously, what we are doing is to discovering all the agents that exist in the enterprise environment, and for that, we actually integrate with platforms such as Bedrock, Microsoft Copilot, Copilot Studio, Google, and other platforms. So definitely, we believe that there's an opportunity for a deeper partnership and go to market together across all of that. And we really want to build an ecosystem because we have a platform play. We're not just doing one thing, but we are creating a comprehensive solution. And it is important to have this full partnership end to end. In terms of like how fast it will go, I mean, I can't predict the future. We are very excited about this opportunity. We see a market, again, demand for such a product, and we are pushing as hard as possible.
Thank you, Todd.
Your next question comes from Junaid Siddiqui with Truist. Your line is open. Please go ahead.
Great. Thank you for taking my question. Vipul, as Rubrik expands beyond backup into data security, governance, and AI trust, how do you think about moving further up the security stack in a way that is differentiated from established security vendors, particularly in areas like identity, data security posture, and threat response? And what specific capabilities or outcomes allow you to displace or win alongside those vendors rather than just merely augment them?
Thank you, Junaid. Rubrik, our approach has always been that we want to be a resilience platform. We are not a prevention and detection solution. And so that we partnered with CrowdStrike, we partnered with Palo Alto Network, we partnered with Okta, and all of the players that are in the business of doling out identity or preventing and detecting attacks. We believe that the cyber resilience is a much bigger opportunity because, again, Mythos and AI models are proving that resilience against the AI attacks and resilience against the agentic compromise, these two are very, very large problems to be solved. And Rubrik is uniquely positioned to solve these problems. So we'll continue to focus on resilience, both against AI attacks as well as agentic compromise or overreach, and we'll continue to build solutions around it. And then partner with, again, as I said, prevention, detection, identity infrastructure companies to ensure that our customers have an end-to-end solution so that they're not having a fragmented experience.
Thank you.
Thank you, Junaid.
Your next question comes from Keith Bachman with BMO. Your line is open. Please go ahead.
Hi, many thanks and congratulations on the result. Vipul, I wanted to go back to the supply chain if I could. I understand your answer is that you're not impacted by the cost of servers or storage media, and you're not in that business. But when customers like the Bank of Montreal think about deploying Rubrik, it is part of the total cost of ownership. And so, for instance, you can deploy on Dell servers, and servers have doubled in price. And when I think about storing on the cloud, HDDs, flash, and DRAM have all increased by 100% or close thereabouts. And that is a cost that's borne by the solution. So when you say you're not impacted by it, is it because that, if we exclude servers even, is it because you have contracts in place where you're not exposed to those costs, or is it because it's a relatively small part of the total cost of ownership? I'm just trying to flesh out why in some ways it isn't impacting. Is it a timing issue, or you think it's a permanent thing whereby Rubrik won't feel the consequences, so to speak, of, in particular, the cost of storage media?
So our customer, first of all, our customers, if they are actually buying Rubrik for their data center enterprise data protection, then they are exposed to the server cost. Outside of it, they are not exposed because they are now consuming cloud and cloud service, and they have long-term contracts. And we never take the ownership of the data in the cloud environment unless they have a SaaS application where they don't have the infrastructure to store data. So we are purely delivering our solution in the cloud, in the customer's own environment, and the customer's own environment within their data center. Many of our customers have long-term contracts with server vendors, and we are not mandating a crazy configuration. It fits into their own configurations that they purchase in the past or will purchase in the future. So as well as the data center is a smaller part of our, relatively smaller part of our business because we have now so many different solutions. If you think about it, our customers are buying Rubrik solution on AWS, Azure, GCP, they're buying M365, they're buying Google Workspace, they're buying identity solution, Okta, they're buying Active Directory, Entra ID. So Rubrik now has such a comprehensive platform. We are not like Rubrik of 10 years ago, which we were purely in the data center because our customers were in the data center. So given all the dynamics, given that we are a software company, given that our customers have contracts with the server manufacturer or they are in the cloud and both places they have long-term contracts, the impact for us is immaterial. And that's why we believe that we have we are confident about our execution and how we are going to deliver this year. But here is the most important thing. We are selling cyber resilience. Cyber resilience is not a discretionary purchase. You have to be in the business first and foremost to be even able to adopt AI. Cyber resilience is even a higher priority for the customer than adopting AI because everybody is worried about. I remember talking to a very large transportation company CEO, and his first thing was that the cybersecurity is the number one business risk for me. And this is the number one business risk for almost every business. Every board is asking that, can you recover from a cyber attack? What's your bounce back plan? And so it's not a discretionary product, it's the highest priority. And so if you look at all things combined, that's why we are confident about our execution. And that also demonstrates, if you look at the cybersecurity industry, we deliver the best result in the cybersecurity industry. If you look at our magnitude of net new ARR of 103 million at our scale, we are unmatched by any company that you see in the cybersecurity industry. And that is not an accident. That is purely a result of what we deliver, and we deliver peace of mind to our customers so that they can deploy AI with confidence and also have sleep easy at night because Rubrik is watching for AI attack. Not watching as in preventing, but watching as in we can bring their business back up and running. And that's why we believe we are uniquely positioned to help our customers and continue to grow our business.
Okay, thank you, Bipul.
Thank you, Keith. Next question.
Your next question comes from Joseph Gallo with Jefferies. Your line is open. Please go ahead.
Hey guys, thanks for the question. Really appreciate it. You made some sales leadership changes last quarter. I was just wondering if you could talk a little bit more about the go-to-market high level. Any changes expected now that Jesse's been in the seat for 3 months? Are you still hiring on the sales capacity side? And how do we think about leverage in the sales and marketing line going forward? Thank you.
So Jesse has settled very, very well, as you can see from the results of our first quarter. And there is no changes that we anticipate in our sales leadership under Jesse. The team has settled well. We are executing in high resonance. Again, we are opportunistic in terms of ROI. If we see opportunity to increase sales capacity in markets where we see high ROI, we're definitely looking to invest. But one thing that we are mindful is we want to grow and we want to take advantage of this market opportunity, but not take the approach that grow at all cost. And if you look at our cash flow and how responsibly we are managing our business while generating a very, very high top line growth, it demonstrates the discipline and controls that we are applying in our business to create a long-term profitable growth business.
Thank you.
Your next question comes from Jim Fish with Piper Sandler. Your line is open. Please go ahead.
Hey guys, this is Tim on for Jim Fish. I just was hoping that you could kind of speak to a little bit about what you're seeing in terms of the demand pipeline, and that you're really only kind of raising guide by about twice as what the first quarter upside was, which is kind of what you've done historically. So any color on kind of what you're seeing in the demand pipeline would be helpful. Thank you so much.
We are definitely seeing strong demand for cyber resilience in the marketplace. We are also seeing strong early demands for the agent security and governance in the marketplace, and also Mythos and what has happened with frontier models. It has brought the awareness onto cyber resilience, and as I said, we are seeing increased number of meetings and increased customer interest and understanding of how they can keep their businesses up and running when you have these models that can actually find toxic combination of vulnerability through reasoning and chaining and do attack very, very fast at AI speed. So, and because of all of that, and this is one of the reasons that we have actually we have increased our outlook for the year. We have raised our outlook for the year because we are confident about the market demand and confident about our execution, and we are feeling great about finishing the year strong.
Thank you.
We have reached the end of the Q&A session. I will now turn the call back to Bipul Sinha, CEO, for closing remarks.
So in closing, I'll say thank you so much to all our investors and our analyst friends for their continued support for Rubrik. We see tremendous opportunity in a world where AI is attacking us, and AI is also increasingly running our business processes. The demand and the need for cyber resilience, both against AI attacker as well as agentic compromise, have never been higher. All of us Rubrikans are hard at work to deliver innovation on behalf of our customers at rapid speed. We are looking at both organic and inorganic opportunities in terms of teams, product, technology to add on to our platform to accelerate the roadmap for our customers. This is the most exciting time for Rubrik. Everything that we envisioned in terms of cyber resilience and this AI agentic world is coming to fruition. We were ahead of the market in terms of preemptive recovery engine and thinking through what it means to deliver cyber resilience in this era where attack detection and attack prevention is near impossible. We are, again, very encouraged by our customers' interest in Rubrik's product. So many customers are coming in our direction. We have a very exciting user conference coming up in Forward. I'm looking forward to seeing lots of you there. Thank you again for your continued support. We are just getting started. Go Rubrik.
This concludes today's call. Thank you for attending. You may now disconnect.
Guys, we made it through the first webcast with our watch party ever on this YouTube account. Very proud of us. And I've just checked, still some viewers are in the chat. And I made a lot of notes, guys. I'm this type of person who's doing a lot of notes to not fall asleep. I'm a bad listener and better talker, but even talking not that great. Ruben and the others, I will definitely react to all the comments during this live earnings session. I will not shut it down before. Yeah, Rubrikans. I mean, that's like in a lot of platforms nowadays. The people call them like SentinelOne. Their staff members, they call them the Sentinels. You know, I think, and whatever. What kind of culture and vibe they want to create by doing this. But we can see after our price here at the screen, which I'm still sharing, is quite unchanged during the note of the price. Yeah, that's the case, guys. I mean, maybe first we go through the comments, the notes I made. Not sure how useful they are, but I will go through them. Then I will finalize the Excel sheet because we didn't finalize the information here. Still some points open, which doesn't take too much time, but definitely some core thing that I can leave a final verdict. Then afterwards, I will check out first market reactions by your comments and Seeking Alpha, first market reactions by the comments on Seeking Alpha, what members they're leaving to the results. Maybe we will check as well the PowerPoint presentation slide deck, but I think there's not that much new to it, but we will quickly go through it, let's say it like this. And if I'm not mistaken, I think then we are done. Yeah, so I try to be quick because it's already 5 past 12 p.m. or 12 a.m., whatever, it's midnight in Germany, yeah, and so tomorrow I need to work. So let's start with it. I'm not sure how reasonable my notes are and how well structured they are, but I just made some and go through it. So what I've mentioned that was already announced a few days ago through their press release page is that they now just joined the exclusive club of Project Classwing members from Anthropic. So I'm quite sure, and that is already as well in terms of USP selling proposition, might be a head start. I think they are from this data security and management platforms the first one and only one who joined this club so far, if I'm not mistaken. Yeah, and if as you know that with Anthropic and this Project Mythos, Project Glasswing, they've figured out a lot of risks and, let's say, holes inside of security nets, or how software, for instance, have been programmed in the past. And Anthropic found a lot of potential errors and source of risks. And so those information will get shared as well very soon with RUBRIK, for instance. Okay, let's go on. Ruben, I will for sure go through the comments. Don't worry, I will for sure. I think that's important, and I like that people, especially like you, using the comment function, and I appreciate this, and I'm interested in this information exchange. I don't have that many people around me. I'm talking about stock investing all day, and so I appreciate this very much that this is taking place here. You know, this is not for me making money or whatsoever. I'm not going for a big YouTube career, obviously. When you check out my channel, it's more about the event itself and the fun. Yeah, so I will do this. Yeah, Classwing, first one. Then, yeah, I mean, they're always talking about cyber resilience, and it's not about really like this active threat management. But on the other hand, they mentioned, yeah, we have a very comprehensive suite, and one of our competitive advantages is the proactive security. Yeah? So somehow it is something special. Yeah, don't know. They mentioned that. I mean, as you know, they have this classic RUBRIK cloud security cloud. Then they have this RUBRIK Identity Security, and they have RUBRIK Agent Cloud. These 3 major products, if you want to sell it like this. And they told, if I'm not mistaken, that the second used one, RUBRIK Identity Security, is growing by 38%. If I'm not mistaken, if that was not the wrong number. And again, I'm not the best listener, I'm better in reading, but even there I'm limited. However, I don't think, if 38% is correct, that this is that crazy good, because I think still the solution is quite new. However, the management sold it like it's a large number. However, but what I liked is, on the other hand, is that cloud ARR, they mentioned that is the most essential KPI in terms of growth, and it's growing by 43%. So the annual recurring revenue based on cloud business, and that is lovely. I mean, it's obvious when you see growth numbers at like Google Cloud, for instance, 62% year on year. We want to see that RUBRIK is participating on this wave, and they are ahead of the wave. And I think that is actually the case, and it might increase even further. You know, I mean, cloud growth, we still right into it, you know, and it might be a really long-lasting trend, and that is very lovely. And what I loved as well is that I mean, a lot of analysts focused RUBRIK Agent Cloud. And if I'm not mistaken, I think past earnings call for Q4 2025, it didn't receive that much focus, not by the management and not by the analysts. It was more like a bit like, yeah, it is existing, we have high hopes, but it will not have that much impact soon. And now they mentioned even an example where a customer decided for RUBRIK and not for the competitors because of the RUBRIK Agent Cloud, I think, which is lovely. So it's a true differentiator. It's different product, different technology compared to the competitors. And they mention as well, it receives good demand, very solid demand already now. And I think that is lovely to hear, actually. So they ramp it up, and they mention as well there is a massive opportunity. They see it stronger than actually RUBRIK identity security, and identity security is already a big topic, very likely one of the, or if not the largest topic in the security space. That is nice to see. They then see this potential, and they mention as well that the same team who rolled out other transitions and transformations in the past. I mean, RUBRIK was as well more like a data security company. Somehow, like the classic one wasn't that focused on much on cybersecurity, and they make happen the shift. Then they make happen the shift from regular paid business models to subscription models, then to more cloud-based models. Yeah, and this thing goes on in the same team who's and I've heard an interview in the past about this, that they have really this SWAT team, let's say it like this, or special entity or team or whatsoever of staff members who are really experienced with rolling out new projects, finding the first products, finding first customers, getting experience of it, transforming it and transporting it, the feedback back to the company, and getting out some value, which you can reuse and everything. The same team who's rolling out and handled the former transition periods is taking care as well of agentic of the generic cloud, and that is lovely. I think that seems like they've proven they can do these things and make these transformations happen, and therefore I think as an investor you can be confident that, I mean, cloud identity security was already quite a hit, was quite strong, and agent cloud will be as well, I think, a very strong development. And I don't know what the competitors do in this regard in the data cyber resilience space, but might be as well some kind of use piece. Yeah, I can imagine that might be the case, and I love that they somehow, I mean, they mentioned that they have two focuses in the future. The first, the go-to-market strategy, for instance, to be active in new regions, which is lovely, but as well setting a higher focus on R&D. And I think that's okay. That's completely okay, because, I mean, I assume they made the experience that each dollar they invest in R&D, research and development, pays out somehow, yeah, and the business is developing very strongly. There's a lot of legacy competition from the old days which are more like classic data storage companies, but not attached with a lot of cybersecurity. And then there are many companies out there who don't have any solution like this, let's say like this, or not really they don't have this focus. The total addressable market and the uncovered space is still very strong, I think. And it's lovely to see that they try to improve and they try to accelerate their product portfolio, and they try to transition the money they achieve now, the cash flow, the revenue, into basically strengthen their moat. Yeah, and as who was it? And the Punk Monk already mentioned in the chat function, they already have a lot of patents and roll out more and more of them, and really create some gap between them and other players, and make sure that players from the outside, like hyperscalers or like more regular cybersecurity companies like Palo Alto, who doing a lot of M&A and are very aggressive in terms of research and development, not jump into the space and think, it's a very juicy cake. No, they still make it happen. And because, I mean, there's always the question, what is the mode of this business? And I think it is hard to catch, actually, and I'm not sure if anybody knows the answer, but you need to know that CrowdStrike, Palo Alto Networks, SentinelOne, all of them have identity security modules, products. Yeah. But on the other hand, look at Okta, look at their business development, how it worked out. Look, we can check it out together. I mean, I'm not into the details, even though I was an Okta investor in the past. Yeah, as I mentioned, I was quite from the get-go invested in cybersecurity. But you can see they had really a strong quarter, and the business is going quite well. Yeah, it's still obviously not growing on former scales, but it is for sure growing. It is quite profitable. And so that is a company which is as well highly specified on one subject, which is identity security. And even though it is a very prominent feature in the security world, it's not like CrowdStrike or Palo Alto Networks or whoever just remove them from the space, you know. It makes sense that maybe RUBRIK is just an expert in cybersecurity resilience, in recovery, and that might be a differentiator. Yeah, and I think you can always think about, okay, platformization is nice. It's nice to have a one-stop shop where you get all the cybersecurity solutions, but I think the reality is different. The reality is there are companies, especially enterprises, who have different demands, different own stuff, cybersecurity stuff, maybe legacy security and infrastructure. The overall setup is very different from one company to another, and the demand, the need for each of those companies, I think, is very different from one to another. There is not like, it doesn't make always sense to go for the one-stop shop. Maybe you just need this piece of a puzzle or this piece of a puzzle and finalize the picture in the best efficient way. And then it's maybe nice to go to Okta for identity, to go to RUBRIK for cyber resilience and storage management platform. Yeah. And another topic is, I don't think you want to throw all the eggs in one bucket, you know. So especially in cybersecurity, I assume it's good to be diversified, no matter if it's about having good position in negotiations for prolongation of contracts, for instance, of the subscription contracts, for instance, but as well of just always picking the best one. Yeah, and that's very unlikely that, for instance, CrowdStrike is the best in all the product categories. There's very likely a better one in terms of identity security, for instance, or a better one in cloud security. Who knows? Yeah, and maybe if you want to have the best for a case like RUBRIK, you go for RUBRIK. Yeah, so that is something what I wanted to add. Yeah, what else I fear, man? It's very and it's very complicated to read all my stuff. I mentioned the analysts, at least some reacted quite positively and congrats to the results. I mean, it was just one or two, but at least that's some positive. Rumi wrote, I just did my investigation. Main beer scenario is one of the big fish looking at them the wrong way and acquired them. Acquire RUBRIK? Who knows? I mean, that would be the end of the investment experience with RUBRIK, but at least it would end in a profit, you know. But I don't think that's the case. I mean, that when you listen to interviews of people and the CFO and the management team, as well the sales top management, for instance, C-level, you figure out that they all of them really see some. I mean, it's just very juicy stage. It's juicy business. Yeah. Someone asked here in the chat, why invest in this? I think it was. Let me check this out. Here, Raraza, why are you guys interested in the company? Just curious. And I made as well some notes, just based on my memory. But I have some I just tell you some bullet points, let's say, like this very quickly, why I think this company is good. And again, I will start one more time with the risk, and that is for sure for me the mode. And that maybe existing legacy cybersecurity companies kick out or announce or release a known solution or acquire a competitor or whatsoever, or hyperscalers like Alphabet, like Microsoft, like AWS, they go for their own solution, who knows. So that might be, there's always this risk, I would say. But again, you see at an example of Okta, there is chance that you stay very focused on a specific topic and you can be very successful because you are the expert in the space and you're getting just stronger and stronger in this space. I mean, in a trivial, non-realistic world, you know, and theoretically there's always this approach that, yeah, there's one Amazon e-commerce shop and everyone buys just from Amazon, yeah, or whatsoever, but in all the different business. But the reality is that will never happen. There will always be some other e-commerce shops who provide clothes, who provide grocery, who provide pharmacy, whatsoever. That's the reality, and that is likely the same case with cybersecurity. Yeah, you might be right. You might be right, Ruben. Who knows? But one other thing what I want to mention is, and maybe we quickly go for this aspect to the presentation slide deck, which is here. And you can see now, right now at least, yeah? I mean, that's great about this business. At least that's the current situation, yeah? Players like RUBRIK, they are business partners and not competitors with those companies, yeah? They're filling these gaps for all of them. You can see that, I mean, yes, they're doing as well own identity work, own agent work, yeah, have own solutions. But on the other hand, they are cooperating with all those companies. They are cooperating with the hyperscalers, as you can see here, the SaaS players like CRM, Salesforce, yeah? And so currently they are really ahead of the wave and perfectly integrated in a lot of stuff, you know. That's the same with here. I mean, you never know. It can change from one day to another, you know. But right now they at least not the partner of the year, yeah, but one of the partners of the year for Microsoft, for Google, you know. That is something great. They have a net promoting score of more than 80, which is heavily strongly. And that is what I can tell you, and that is as well part of my thesis, that check out on Reddit or wherever, yeah? Check out how satisfied customers are with RUBRIK. I'm not sure if I mentioned this already in the past, but when you compare this to CrowdStrike or SentinelOne, for instance, yeah? So for endpoint protection and other solutions in this space, a lot of times there's no right or wrong, and some have negative experience and some positive whatsoever. But when you check out RUBRIK, okay, some tell on the first glance it might be expensive, but when you consider all the security functions which come in hand, it is, let's say, fair priced, yeah, compared to other players in the data management space. But what you need to consider, how happy they are, the customers. So many customers, right? It is perfectly on the level of not too complicated, not too complex, not too simple, yeah? It just works. If you recover, if there's a breach, you recover very quickly. It just works. If you have an issue and you need to call and reach out to the service team, you have very competent players in front of you who is supporting you, not sourced out people. I mean, yes, I think they are as well from India, for instance, but they are very well educated, yeah? And that is not the case for all the players, for sure not in the market, because again, some are too complicated, some sourced out and to incompetent people, the service, for instance, yeah. Some not doing enough security in the space, for instance, yeah. Some not having, some are not quick in recovery. All of this, you know. So RUBRIK seems to be a perfect balance in this space, yeah. And seems to be really ahead with where they are currently. and that is lovely, you know. So that is part of my thesis. So they are very competitive. The risk is existing in terms of the moat, but I think that's always the case in a lot of spaces, like as well cloud security, for instance. And still, I think they do their best to stay independent and have their space in the business. Then there is the chance they get quite quickly profitable, GAAP profitable. I did some research and some calculation, and I think soonest might be 2027, which would be quite early, calendar year 2027. But realistic is or not. It's not unrealistic that it happens in 2028, which is for comparatively new company in terms of the IPO, which took place roughly a year ago or something like this. It's quite new, quite quick how they ramp up their profitability. So that's lovely as well. So, and then I think it's in general the perfect time. I mean, you know, the cloud development, the data focus in terms of AI, and the overall understanding of AI currently. You know, that was not the case 2 or 3 years ago. Nowadays, managers forcing others or themselves to go for AI whatsoever. And for instance, providing a solution like this RUBRIK Agent Cloud is a perfect fit for it. They seem to be always in front of the wave. They adapt very quickly, and that is just very nice. And you can see it with this 120% NRR, which is strong, which is just very, very strong. You know, again, this combination out of satisfied customers, a very solid product which simply works, where you can read sometimes and read it, and who knows if it's fake or not. Nobody knows the reviews, but some people leave their comment that they say, hey guys, that's really the best software out of our full stack of solutions. If you read I never read something like this at CrowdStrike or SentinelOne. Yes, you read sometimes they're really the best in class or whatsoever, but people write really, we are customers since 7 years or whatsoever, and there's no reason to shift, not to change anything. It's just doing perfectly what it's doing. Yeah, and that is lovely to read something like this. Really, I mean, I personally want to invest in winners and winner products. And if I read something like this multiple times, I feel great about the decision to be in, that this company is one of the 4 companies I'm invested in. That's my personal choice, obviously. Doesn't have to be your, but it's mine at least, yeah. And you can see this satisfaction as well, of course, with the NPS, with the score here. Wait, here this. You can see it here. Yeah. Okay, let's go on. Then last quarter, and that actually was not mentioned in the call right now. Maybe it was mentioned because it was the full year earnings call last quarter. But last quarter they mentioned they have a win rate of 90%, I think. And this quarter it was not mentioned, you know. But yeah, I still think they are very, very competitive and more rather ahead of the wave than behind the wave, yeah. Yeah, man. And just on the short side, short term, I would say they are very, very strong. Ruben, check this out. It takes some time for it. I can recommend you, yeah. Or suggest you. No recommendation by me, guys. I don't want to get problems. But what I suggest is figuring out how strongly they are sandbagging this company. And if I remember correctly, I mean, again, they are just IPO'd 1 year ago, yeah, so 4 or 5 quarters, something like this. But they started heavily last business year. The guidance for first quarter, sandbagging in full year as well as next quarter, they always adjusted it and always set it up quite highly, you know. And each quarter they adjusted all the parameters of the full year guidance and raised it, you know. And it might be the approach, and we will see this in a moment. But this was this quarter again the case. So I think that is something. So the result of the full year might be very, very strong. And I mean, I don't think they are the type of persons, who knows, that maybe they are. But the management, I don't think they are the type who just telling, agentic cloud receives great demand or whatsoever, because again, past quarter they have been quite careful in terms of framing it in words, and I think now they feel or seem way more confident as well about cloud growth and everything. And again, not everything is in perfect shape, but yeah. So I think really there's a lot of arguments. Another one which is can I share this? Let me check this. Look, I have already some notes, and this is from a news of 13th of June, I think, was released in the news room of RUBRIK. And I think it's very nice. I mean, Gartner, you know, this company, very likely, like Magic Quadrant of Gartner, the RUBRIK, I think, is as well in the lead in terms of not execution, but vision. Yeah. So in terms of how advanced their product is, execution is more how strongly they can roll it out and deploy it and this kind of stuff. However, I look at those numbers, yeah, and I mean, Gartner has a neutral position, yeah, and doesn't have to be the truth, but it is quite interesting because they are experts. You can see here by 2029, that's not that far in the future, it's 3 years from now on, 2.5 years actually, yeah. And they mentioned, like, is it 2.5 years? 75% of the enterprise will use a common solution for backup and recovery of data, compared with 25% right now. Yeah, so there's a lot of market not covered by this kind of solutions. It's not like in the other cybersecurity space, like endpoint protection, where basically either you have Microsoft Defender, at least something like this, or you have even some advanced stuff like CrowdStrike, like Palo Alto, like SentinelOne, your customer of, yeah. So here there's a lot of room for improvement because many companies don't even are customers in the space, yeah. You can see here that the very likely the awareness will shift way stronger that this kind of solution is required, yeah. Now 20%, future 80%, yeah. In here you see this basically when you talk about this legacy, old-fashioned stuff. Nowadays, 55% don't have cybersecurity, identity, this stuff, and for sure no agent solutions included, yeah, when we talk about this product space, data space, and backup space, yeah, and future will be 95%, yeah, and likely, I mean, RUBRIK is defining themselves through the security. Yeah, this room, not sure, but Gartner is, I mean, it is the same like identity, basically, I think, from my perspective, yeah. Again, no matter if you go to CrowdStrike or whatever, when you go to the product categories, one product category in the cyberspace is identity, is classic identity, because identity is huge, obviously. Again, I think RUBRIK mentioned this as well, that 90% of the breaches, the attacks, the successful ones come through identity, actually. Yeah, so someone sneaks in, and yeah, when this happens, I mean, therefore, identity security is very important, because when you have good identity security, you can minimize this risk, likely, just from my non-professional position. Yeah. And but if it happens, and there is no 100% security in the world, that is what you read as well in cybersecurity forums, yeah, and subreddits whatsoever. There is not. What is important is recovery function in the space, and yes, all the players have some recovery function, but a lot of times not for the full data stack or whatsoever, yeah. And there, companies like RUBRIK come in. You know, there is the proactive, preventive space, yeah, for securing data. There's the other one if it goes wrong, yeah, and they crossed through the, how you call this, the defense line, yeah, which happens. And then, I mean, I'm not responsible for something like this in the company I'm active for, yeah, but I assume that you have nowadays you have insurance for this kind of stuff, for cybersecurity breaches, and I assume that your fees will be lower if you have a customer of a company who have endpoint protection. If you invest more money in it, it's very likely you will have better fees, lower fees, yeah, and better conditions in general. And that will be the same with this kind of stuff. And I assume that in the future, even to get some certifications, and like 27001, I think, is the certification for cybersecurity, yeah, if I'm not mistaken. Then to get the certifications in the future, it is not unlikely that you need to have endpoint protection security, for instance, identity security, but as well cyber resilience and recovery functions, yeah. Yeah, that might be the case. Yeah, it might be a sector. It's hard for me. You might be right. What is the definition of a sector or whatsoever, you know? But it's definitely one type of companies. And there's Commvault, there's Cohesity, I think they're called. Then there's VM. And then are the legacy ones. I think Dell as well, for instance. Yeah. So there are a few players of them. Check the Magic Gartner quadrant. There are a few players for sure. Or we can check it together. Just give me a quick moment, please. Wait. Shit. So I have it. I hope I can make it a bit larger. Okay, I got it. Let's take it back, and here you can see the most up-to-date Gartner quadrant, and you can see there are four larger ones in the lead, and there are some more legacy, old-fashioned ones. You can see again, Rubrik is leader in the visionaries or vision, and execution. There are other stronger companies, Commvault is as well publicly traded, so it's a stock. The other ones not, I think. But I think Cohesity will have an IPO, maybe even end of the year already. Not sure, but might be the case. Yeah, but for instance, I think Commvault, for instance, not a bad solution, but it's very, very complex. It seems like very, very complex. We need to people who learn this very strongly based just on their solution. Yeah, and if you are trained with it, then you can do a lot, I think. But if this is required, I don't know if that's the case. Yeah. And in terms of service, it seems like Rubrik is really top notch, and service is a big aspect. I mean, you want to feel secure in terms of your solution, but as well in terms of having the founder decided for the right solution, for instance. Yeah, and when you hear from other companies who are customer of Rubrik that service is top notch, that's definitely a game changer. Yeah, not something what we should forget. Yeah, for sure not. But let's go on, guys. Not sure if let me see if I have some. And then what aspect was, I think two analysts addressed the question in this direction. What is going on with the impact by hardware prices, rising hardware prices for DRAM and all of this? And Bpool mentioned that we are not primarily affected by it. So basically not. Let's say it like this. Rubrik is software and not data storage, not hardware. And that is, I think, something which people out there not understand. And I think it's, for me, difficult as well, because I never used a company product from Rubrik or from VM or whoever. But yeah, you need to accept it is, again, something which is using the underlying existing data storage most of the time, not always, but a lot of times, for the operational data especially, and manage it. Yeah, so they mentioned as well they are not the owner of the data, for instance. Yeah, so I mean that's lovely to hear. Market didn't react to this information. I assume it was a hot topic, but I think they responded very well on it. Actually, what I wanted to mention, let's see what is the stock price. Before the earnings call started, I bought in a bit more shares, not that many. Wait, it's 2% down. Yeah, roughly 2%. But for, what is it, like $1,000 to $1,200. I think I bought shares. I didn't even know that I can buy after hours, but I did it because on the first glance I was convinced with the data, the numbers of the results, and I thought, hey, I take the chance. I mean, so I did already 2% with this buy, even though I expected that, I've been honest, I expected a stronger beat and raise, and I expected better reactions by the market. But honestly, I mean, after cybersecurity ran so strong in the past weeks, and then the results of, for instance, CrowdStrike wasn't that strong, that crazy strong with SentinelOne, it was already quite unlikely that RUBRIK aftermarket will raise that heavily. But don't forget, the 10th of June will be the analyst day with John Cena as well. And the other person, Ruben, you mentioned, I will check out later the comments. And yeah, I think it's not unlikely that maybe they drop some very hot information during this event. And I assume that if tomorrow is green day, that this will turn as well positive. Yeah, that's my bet. I already had the right idea about price development after hours at SentinelOne, and hopefully here as well. I mean, again, we will check out the numbers and finalize the verdict in a moment, but yeah, I think so. There's a solid chance that this turns into green, and it is already recovered again from more than -4% right after the numbers have been announced. Okay, guys, I mean, I'm done with the notes, I think. Maybe I missed something, but I want to finalize the results, guys, and come to the comments. So here are the results. We already covered top and bottom line and some details. Let's go further. And now we talk about the expenses, yeah? We have here general administrative, sales and marketing, and research and development. And again here, percentage of the share of the revenue. You can already see on the top level, operating expensive. Now it's to double digit, not triple digit anymore. First time ever. Strong development. Very solid on the first glance. Let's start with G&A. You can see it's higher than past quarter actually. I mean, past quarter it went down by roughly 12%. And now year on year by another 4%. So it is almost the lowest, but it increased slightly. Yeah, I think that's not nice, honestly. I rate this negative. It's not that heavily negative, and I think 17% G&A expenses based on revenue is not that heavily weak. I mean, it can get for sure lower, no question about this, but it's already okay level, and it's just very regular that they reach some kind of bottom or ceiling or whatsoever on a certain level. But yeah, I think that's not that positive. Now let's check out what is going on with sales and marketing. And I really double checked the number which I've entered here, because it's really like decreased heavily, yeah? Like 30 million quarter on quarter, might be seasonality whatsoever, but that is really low. Sales marketing is really, really low. Didn't expect this, really not. Yeah, so past quarter year on year -3%, now by another 11%. Not sure if they release as well stuff like SentinelOne or whatever, but remove them, fire them. But yeah, it's crazy for me. Then we come to research and development. And yeah, you can see it increased for sure. And it's one of the higher numbers in the past 5 quarters. So past quarter, you can see year on year, it went down by -4%, and now more or less neutral compared to 1 year ago, 20.94%, 29.4% 1 year ago, now 29.5%. So it increased slightly, easy negative rating. I need to be honest and strict here, even though, yeah, again, I think it's out of this 3, research and development is for me the by far most acceptable increase of operating expenses, because I think it's an investment to the future and it's very reasonable. and I think I know what they know what they are doing, and it's okay, yeah. And you can see still it's an all-time low in terms of the head number. The details are a bit mixed, but don't forget this one went down quarter on quarter by minus 10% or 11% year on year. So sales and marketing really covered the slightly more negative development of G&A and R&D. So that overall is actually quite neutral to positive. Yeah, we should not forget the green is way greener than the red is negative. Let's say it like this. Yeah. Then I have two own KPIs. Again, don't consider that strongly the numbers. It's not about the numbers. It's more about the ratio quarter year on year. Yeah. And these KPIs are created by myself. Not sure how reasonable they are, but I used them as well in the past for SentinelOne, for instance. I now use them for this cybersecurity company. So I have one number which shows the cost to keep the customers, the large customers, and another position the cost of acquiring new ones. Yeah. So here I basically put in ratio the G&A and so the general administrative costs and the research and development costs, 50% of it, and put it into ratio of the 100,000 plus customers in revenue. Yeah. And that is the same what I do here, but here instead I'm not using G&A. I use sales and marketing because that is a little bit more addressed to new customers than to existing customers, and G&A is more addressed, from my perspective, a bit more at least, to existing customers than to new customers. I mean, it's very, in German you call it Milchmädchenrechnung, yeah? So that means that it's really superficial and really not scientific, yeah, but for me it does the job, yeah. And of course we want to see it's getting down, yeah. So past quarter it went down by 20% and now just by 1%, yeah. What is going on here? It's likely the case is that, yeah, again G&A increased, and on the other hand not that many new customers, large customers, yeah. I mean, yes, there are new ones, but could be stronger. So that is definitely negative. Yeah, it's down, but it's not all-time down. It could be better, the development. But now let's see what is going on with getting new customers, how efficient this is working. And it increased already past quarter by 32% and now by another 14%. So that's not nice, yeah. It's almost an all-time high in terms of the cost for new customers. That's not nice. Negative again. So it's crazy because most of the time when I have companies, I'm doing the live earnings, top and bottom line can be negative, but still something behind the curtains. Some company specific data can be positive. But in this case, a lot of neutral to negative stuff. Yeah, so it is how it is. But let's see what is going on with the net income margin on gap base. Maybe here something will shift. And it looks like it because you can see past quarter went up by 22%, which is awesome from my perspective. A revenue growth company, basically. I'm invested because of revenue growth in this in RUBRIK. But seeing this development in terms of profitability, and now you can see another 26% year on year. That is awesome. I think that is very strong, the net income margin. That's very positive, yeah. I mean, again, profitability is not that important for me, but considering this profitability number, it's nice. It's minus 11%. It's by far the lowest so far. It's, if I'm not used the wrong number, that is very, very strong from my perspective. Not sure if there's some one-time number dynamic included or something like this, but it looks very strong if that's the case. And then we have the free cash flow margin, and this looks quite strong as well. I mean, you can see past quarter year on year, it went down by 11%, and now it went up by 7% year on year. So it is not the highest. It's not the highest. Again, there's some kind of seasonality existing in this business. You can see, for instance, Q3 past quarter was higher, or very likely here was some maybe one-time effect, yeah, because it was almost 30%. But it's lovely to see. It's quite high. It's recovering. It's way stronger than 1 year ago. 1 year ago was 12%. now 19%. So that's solid. Free cash flow margin for me is positive. And it's actually, we're talking about $74 million US. That's definitely some powder, let's say like this. And that means the rule of 40 is, rule of 40 combination out of year-on-year revenue growth plus free cash flow margin. Like this classic SaaS number, if it's more than 40, seems like a good bet. I'm not sure about this because I don't leave a rating here. It's not fat marked like here those letters. So I just added. You can see it. For me, it's not that interesting, and you can see it was definitely already higher in the past. Very likely because of the revenue growth. But yeah, it's still way more than 40. It's 58. I think that's solid for the size of this company. And then we have stock-based compensation. How heavy does the management consider the shareholder value, our existence, let's say like this, as shareholders. We don't want to see a strong stock-based compensation. We want to see low stock-based compensation. Enough for the staff members, obviously, because again, it's their salary, part of their salary, and bonus-based, performance-based most of the time or a lot of times. But yeah, and you can see, it went down past quarter by already remarkable 11% and now down by 7%. I think both is not bad. It's an all-time low. It's just very regular that it can't keep this momentum of this high numbers, but 19% is good. Obviously we want to see a single-digit numbers. Best in case something like 5%. I think it's not realistic, even close right now. It will take way more time to achieve this. But 19% seems, for me, is quite solid, I must say. It's like all-time low. It is strong, I would say. But I keep it neutral. Let's say keep it neutral, because before the AR growth and the 100,000 customer curve, I keep it neutral as well. And it was as well 2 times an all-time high. But the year-on-year development low decreased a bit the dynamics. So you can see, there's definitely some red stuff, but it's complaining on a high level, I need to say, because again, net revenue retention is still 120%. The neutral stuff is neutral because it is really neutral. It could be even positive, maybe. So AR was very solid. I think 100,000 customers growth was okay to solid as well. And the profitability overall, yes, gross margin gets a bit lower, but net income margin, free cash flow margin, very strong. The expenses mixed, but research is for me fine, and sales marketing somehow is decreasing very heavily. So this is for sure at least neutral from my perspective. Let's say neutral, but really solid neutral, I think, because the important numbers, I think, look quite good. NRR would be lovely if it would be higher, I think, but it's okay. Hope they keep this level at least. It's not getting down. Just see your comment, Ruben. I'm using only one screen, my laptop actually, my private laptop, even though I have 3 screens in front of me behind it for my job, but I'm just using my laptop because my first streams I always did it in the car, and I was mobile. I love this scenario, but then I've decided to do it from home. It's just more relaxed, more comfortable, especially doing longer sessions. Battery runs out a lot of times. But you're right, you just mentioned, oh my god, low stock-based compensation, this is rare nowadays. Yeah, it's 100% right. And so many companies as well, like Zscaler or whatever, they're really stumbling and falling because of this kind of topics, that investors and analysts ask themselves, will they ever be profitable? And that's the differentiator here. Again, as I mentioned, I did some calculation and did some research, and who knows if I did it correctly or not. It's very subjective. It's very opinion driven, and depends on the parameters you use. But it's not unrealistic that 2028 they become GAAP profitable, maybe even earlier. And that is very strong, I think, for a company growing on this level and being valued like they are valued. And you can see this decrease of stock-based compensation, yeah, it's still not low, obviously, but it's okay. But guys, now let's check out. So we had very positive top and bottom line, and we have very neutral, solid neutral at least, company details. And now we go to the guidance, to the future. And they required full year guidance, and they provided full year guidance, the Fed mark ones here, yeah? And you can see this was the former one here of Q4 2025. This is what they have. Oh, no, so like this. This is what they have provided in Q4 2025 in terms of those numbers. And this is already the new ones, yeah? And this is the ones of the results of 2025, obviously, yeah? But you can see here that it looks juicy from my perspective. Revenue, I mean, they started with 1.6 million, more or less. Now they're already with 1.64. And again, I mentioned that last year, at least, I think they always adjusted into the positive direction their guidance each quarter, yeah? So they started already now. So that is for sure green, positive, love this, yeah. Then ARR, yeah, annual recurring revenue. They started with 1.83 and now they are at 1.8586. Not that heavily improvement like with revenue, just 20 million, but an improvement. Lovely, leave a green rating. That's nice. I mean, yes, it's not close. If that number is correct, right? It's not close. 27.3 year-on-year growth compared to 34% year-on-year growth. But if they still sandbagging and if they still increase the guidance and the end result of 2026 will be way better, maybe they get way more traction and growth for agent cloud than they expected, for instance, or in general cloud consumption and everything, whatever, demand increase way stronger than expected, and I would not be surprised. That's my personal take again. No consultation, yeah. But it would not surprise me if they end more than 30%, yeah. If that's the result in terms of ARR growth, for instance. But it looks good. And then we have earnings per share, and what is going on here? I mean, before it was $0.17 US, yeah, and now it's $0.30 US. They almost doubled the guidance. What the fuck, guys? That's solid from my perspective. And look at the year-on-year development. Look at it. It's solid. It's very unregular that business is so profitable, but it seems like this might be one of the few software and SaaS and especially cybersecurity companies who really have a clear path to profitability. I mean, I called already the thumbnail of the SentinelOne earnings stream 1 week ago, clear path to profitability. But yeah, that might be the case here. And for SentinelOne as well, but it might take a bit more longer for SentinelOne. Who knows what the future brings? I think SentinelOne is a great company with good products and everything in a growing space. Yeah, but maybe even the profitability stage, the profit stage, RUBRIK will reach it quicker, yeah. So we have here the ARR contribution margin, and you can see it's already at 13.2%. And yes, they increase it obviously as well by 1%. Lovely, like it. Then we have free cash flow margin. And it was before 18.1%, what they have provided, or 298 million. No, before was something else, but now it's 298 million. Way more free cash flow before. You can see now it's on the same page like the results in 1 year. That is very, very solid. And it will be likely more. So before it looked like they will decrease year on year in terms of free cash flow margin. Now they increase. Yeah, nothing. And again, that's still guidance. There will be guidance, and not unlikely they might readjust guidance a few more times. Yeah, might be the case at least. Who knows? And then what I liked almost the most revenue, maybe more in ARR, but what I really liked is the weighted average shares outstanding. I like that there's a certain discipline existing in this space. And you can see year-on-year growth is very strong. But it was stronger because before they addressed 232 million weighted average shares outstanding, and we want to see a low number, obviously. Let's see how much this was. 17.2%, and now it's 15.2%, yeah? So it's getting already lower, this target, and it's way stronger, way larger than 1 year ago, but again, it's IPO year and whatsoever. We need to see, yeah? We don't hope it's too much, but you can see stock-based compensation based on revenue is developing and heading into the right direction, and I love that here they lowered it, and I hope they lower it way more often, that maybe at the end it's something like 10% would be lovely, so just 220 million roughly, and then it would be fine, and shareholder dilution is not that strong. Yeah, but you can see that, I mean, we have the existing results. I mean, that's a mix because here forecast is existing as well, but that is very positive both from my perspective. Then we have very solid company-specific details, or let's say solid, just neutral even. And then we have very positive guidance adjustment. No doubt, every category exceeded. Everyone was adjusted in a positive way. Again, yes, maybe there are kinks in sandbagging, but guys, what else should I leave? And I mean, here, I'm not sure if I missed these numbers. I'm not even sure if this 89% is correct. Maybe I remove it better, this. And so, yeah, this number is not valid as well. But however, positive, neutral, guidance positive. I love that guidance is positive. I think guidance is very important, way even more important than actual results. So I leave it a positive rating. Ruben, you're right. You might have to go. Yeah, that's unfortunate, but I understand it. It's quite late, and for me as well. Yeah, so you already recognized, I think, that I rushed through all the details. Sorry, but this number is not correct. It's the old number. Yeah, man, but it was a pleasure. Let me know when you really left, because then I will not go through your comments. I think then I already covered all the comments. That's unfortunate, but then it is what it is. But yeah, you can. Should I come, colleague? I want to first check out the market reactions, but then I go quickly through the comments. What you have left here. It's real slowdown we experience in all these cyber names. Yeah, I don't think it's that weird or surprising, because I mean, valuation is high for basically all those companies, and for some like CrowdStrike, it's sky high, the valuation, I think. And yeah, you can't do a misstep. And I think the market was and is still very bullish about, okay, way more data, way more unsecurity, agents and AI and LLMs are doing trouble and whatsoever, and companies developing way quicker, so security is way more important than ever, way more data again, and this kind of stuff. And yeah, I think market just expects very high developments and price those developments in, and if they not come, and I think they didn't come for most of the companies, a part of RUBRIK, but even there they could be better, I think. However, yeah, then it is how it is, yeah. You put in these work super fast to build these sheets. Yeah, but today I was 5 minutes late honestly. But thank you very much. It's a real slowdown experience in all the cyber names. Some numbers slow down, yet by all real work metrics, all numbers should be up. Yeah, but in case of RUBRIK, it looks solid, I think, at least. What else do we have? I will now switch to writing. Okay. I already... So then you write... It's a good question. Cyber is going to be important when 80% of our infrastructure runs on cloud, 100%. Ruben, you already provided the answer, or part of the answer to Raraza. You're right, we are a bit off in terms of timeline, but I think cyber needs to also start thinking about quantum and quantum-enabled agents. Yeah, for sure. I mean, for sure, quantum, and again, what I've already mentioned at the Sentinel earnings call, I always think about, okay, what means when, for instance, cars, automotive sector is autonomous driven, who's protecting this infrastructure, and does every car need to have, for sure, somehow it has because it's connected to a cloud or whatsoever, but it needs to be secured as well. And there are and robots, of course, working in the factories and whatsoever. So there are many, I think, cases for cybersecurity and for room for improvement. We already talked about the R&D. Then you're right, I legit been through so many of this limit yourself to one question that it legit is starting to blend in with all the U-Bahn announcements in my head. One day breaches are real danger right now. That's correct. So in a way, the cybersecurity needs to be a constant test of defense done by multiple agents 24/7, like penetration tests. Yeah, that's correct. And I mean, that's the reason why SentinelOne, for instance, stating that AI-driven cybersecurity is so important, or that for a moment, because of this project Mythic by Mythic, whatever, by Anthropic, the market for a certain period of time thought that AI will do cybersecurity by itself in the future, which is obviously not the case. But yeah, that's kind of the approach. Then we talked about ServiceNow, and for me it's as well a big question mark. I have really no clue. Maybe everything and nothing, but yeah, I assume there's a place for this company. But what I need to tell is ServiceNow, I mean, yes, it suffered in terms of the stock price in the past months, but I think ServiceNow was never even close that popular than right now. I mean, at least when I listen to podcasts or YouTube whatsoever, so many people in Germany or internationally talking about ServiceNow, never they talked about it. They talked about Microsoft and this kind of stuff, but never about ServiceNow. And now, because it was that heavily damaged by this AI development and everything, that a lot of even like value investors now invested in ServiceNow, for instance. Then you mentioned, Ruben, I think they have a minor optics problem. They keep saying we have a tool to recover data. If I was a simple person, I would say, how about just don't let my data get taken? Yeah, okay, we talked already multiple times that my take on this is that there is no 100% security. And I assume everyone who's involved into this business and is a cybersecurity expert or is part of the how you call this, procurement department of company, then you very likely are aware of the fact that there is no 100% existing cybersecurity, and you need to go for this kind of solutions to make sure you really bulletproofed everything, bulletproofed, secured, whatever. Okay. Then you're right, the moat is somehow decreasing, if I'm honest. Yeah, again, I don't think that's the case. I think they implemented so many different products and parties and companies into what they are doing. Now they're part of Glasswing. They have a lot of patents. They're investing even more money in research development. Again, I think really, even if I'm not an expert, but just my non-professional take on this is, I think that because people think it's just data storage, it seems simple, but it is not data storage. Again, it's software, it's data security and management platform, and it has different kind of functionalities and USPs compared to other players, for instance. And there is a lot of brain work comes to it, and there might be more moat than people would expect. And maybe it's not even that easy and simple to move from one vendor to another if you're already a customer of, for instance, RUBRIK, especially if moat might be as well an awesome customer experience and the product is just working perfectly fine and it has this kind of reputation, then yeah, it is just the leader in the market. Yeah, and I think AWS, it's the same like with Microsoft Defender. You have one basic solution existing, for instance, yeah. As well, when you go for AWS, very likely you have very likely some kind of cybersecurity products or whatsoever. But there is this difference if you got the most advanced one and top-notch ones, or if you go for just some add-on whatsoever, yeah. Then you write, usually cyber companies come with a huge plate of items. Hell, in fact, if I remember correctly, long ago, antivirus companies had this sort of resides in their desk of tools. Yeah, I had, but complete different world for sure. I mean, there are stats already existing that do AI, even people who are not programmers or whatsoever, they start to hack, and so I think the number of attacks are increasing heavily through AI. So that's, at least for cybersecurity companies, a lovely development. It gives a lot of tailwind. Okay, then you write, I have to see what their software solution entails because it feels like very pinpoint, big, like over specialization, one task in the middle of an entire infrastructure. Yeah, okay, that is what we talked about already, that what is my take on this, and that there's the space of this business, what they are doing is not that small, but as well not large in terms of what they are doing, let's say like this. But it's important, I think, that what they are doing is so essential that it's very important they do it right and a very reliable level. Big fish looking at them wrong. Acquired yes, it's very juicy business, and I would bring patents to, because it feels their business should be very vertically integrated. Then you write, Ruben, yeah, I get it. It's a good business to be in they just need to grow more because below 20 billion is like prime acquisition stage. Yeah, might be the case. But again, you hear a lot of time. I mean, co-founders are still involved and heavily invested and always telling about, it's their managers, obviously they're telling something like this. They're as well salesmen, but they are really going for a large thing, and to sell this company right now, I think is completely nonsense, really, because they know best, I think, what they have with their solution, and you never know. Yeah, maybe it's get sold tomorrow, but they're riding perfectly the wave, and the wave just started very likely. Yeah, I mean, it's cybersecurity, it's data, it's subscription, it is cloud, yeah, it is all of this, yeah, and it's AI, yeah, so and identity and all these keywords, what you love, and yeah, maybe even today the market didn't react that positively, but on the midterm or long term, I expect opposite development if they still provide those kind of performances. Rumi, right? This might be a 5x possible. I need to see the rest of the data. But create a mode. You're right. Well, a sector would create a mode that would be it costly to switch companies. It like the whole Salesforce mode that clients can't switch easily. Yeah, that's true. Or with SAP, I think it's even way more crazy than with CRM like Salesforce. But yeah, and I think it's already quite challenging to switch in the space where RUBRIK is active, even though it works, because I think RUBRIK mentioned as well that there is a lot of old-fashioned business and they win these projects and they onboard well, or you could even read on Reddit that at least RUBRIK is very skilled in onboarding new customers in the space or customers who already have been customers of competitors. Then you write, well, they have zero hardware prices, which told me the analysts didn't even know the company they were dealing with. Yeah, maybe, I mean, look, with their cloud provider, they price it in, maybe something like this, So maybe this is meant with this hardware cost. Then you write, but this is legit different business to normal cyber, so it should not go down with the rest of cyber. Yeah, but look, Reddit is the same. Reddit is not a software company at the end of the day. And when software companies getting stressed and pushed down by the market, Reddit a lot of times get pushed down as well. So not surprised if that's the case. I think RD spend is important for the upside. Yeah, you need to improve your product to keep up. That's true. PS, I would even say I believe in the CEO when he says cyber resilience and not cybersecurity. They aren't securing anything, they are recovering it. Yeah, and that's true. But you should not forget as well, they do for agents, for instance, the rules. Yeah, I think you can do with Agent Cloud, do the rules for chatbots or whatsoever. Yeah, and for identity, you can check, for instance, for identity security, that the right persons have the right rules, let's say it like this, and the right access. So, and there is this threat detection is kind of existing, I think. I think somehow, I'm not sure how they do this. And again, I'm not by far an expert, really not. But somehow I think they have some kind of intelligence existing which secures the data, their data at least, yeah, and the data they manage, yeah. And they encrypt it, you know, they put it and convert it somehow and whatsoever and lock it up. And so it has kind of this effect, yeah. So, but at the end, I assume, yeah, the catchphrase is recovery for someone who's not involved. But I think if a potential customer or prospect is doing research and negotiations and figuring out for which kind of company in the space I should go for, then it's not anymore just recovery, the argument, you know. And then it's more about, okay, what comes in hand with this comprehensive product suite? What is as well part of the product portfolio? And then maybe more proactive security is more driver for deciding for RUBRIK and not just resilience and recovery business. You're right to be a nerd. I would say this company acts like a defense in depth. If warfare terms, the enemy can bypass the front but docks down in their layer. Yeah, exactly. That's a good example. Very good. Low compensation, double EPS. I might have to become a full RUBRIK. Yeah, what to do? They do what does ServiceNow do? I have no clue, man. But yeah, I can relate to your example with the CEO. I mean, the former SAP CEO with this sunglass. I think he had some accidents with some glass on the stairs in his house. I read somehow in the past the story, and yeah, but hey, he's a very charismatic CEO. I think he looks really like an action figure or something like this. And that might be already enough for a company price, for stock price to increase. Yeah, no, I think they do their work right, and I assume they adding for sure value. And me and maybe you, maybe we are not just the right persons to answer the question what ServiceNow does. Rereading the chat, I like how the more I learned about the company, the more I was in favor of it. Yeah, yeah, there was definitely some learning curve existing, I assume. I'm quite sure you do the best decision, whatever, how you decide. Maybe RUBRIK is not the one company you should be invested in the software space, or the one you should be invested in the cybersecurity space. Maybe there are better takes, but for me, I'm quite risk orientated as an investor, and I always try to invest in winners. And when I compare RUBRIK, for instance, to SentinelOne, I still check out every day SentinelOne stock price. I mean, okay, I just sold it last week. It's not that far away. But I mean, SentinelOne was always this, I waited for this breakthrough numbers and event and whatsoever. And it never happened, unfortunately. Maybe it will come now. Maybe it's a good time actually to invest right now in SentinelOne. Who knows? So it was not an easy choice for me or decision to leave the SentinelOne position behind. But RUBRIK, for me, I just want to be very strict and very hard to myself. And I always try to cover a space, a sector, an industry just with one company. And I only own 4 companies. Unfortunately, not fully, but at least part. And I think RUBRIK is really, I mean, again, if last quarter, Bipul, the CEO, mentioned like 90% win rate, then you read on Reddit how satisfied customers are. Then you see all the business partnerships and the awards, and you can see that that there's a high NPS, and you can see that identity security getting adopted very well, and now they have Agent Cloud, and it's fitting very well with. They're very likely participating stronger on AI and on data and on cloud development than, for instance, SentinelOne. And so SentinelOne is way more, for me, it's maybe more interesting value play, but RUBRIK is, for me, the way more clear definition of a growth company or even hyper growth company. And now even in terms of profit, it's heading in very strong direction. And I think it just has the better arguments, I think, right now. Yeah, even though stock price is now tanking, we see what is going on, minus 2.5%. But this happens, yeah, and that can be sentiment that can change tomorrow and 1 week whatsoever. However, yeah, but yeah, and I think even though it don't have this lock-in effect that heavily like SentinelOne when you sell so many different modules to your customer, for instance, and the customer, yeah, even if one module is not working, one product of SentinelOne is maybe not working perfectly, from customer perspective, you might still be customer of SentinelOne. This kind of lock-in effect and mode or whatsoever might not exist, but SentinelOne always was challenged with so much competition. The space where SentinelOne is with endpoint protection, a little bit cloud, a little bit identity, a little bit data, a little bit agent. This seems so crowded, this space, and it never ends, this competition, I feel. That's the reason why I think still stock-based compensation is so high, because the war of the talents is so intense in this space in cybersecurity. Otherwise, you maybe the best employees leave to competitors or whatsoever. And all of this seems a bit unfortunate. I mean, it feels like every one of them is fighting each other somehow. And in terms of RUBRIK, it seems like, okay, they have their 4 clear competitors, but they seem to really be in the lead in some part at least. I mean, they're not the largest one of them, but they're developing very strong. They're doing the right moves. They have very happy customers and doing the thing absolutely right. They are on the right point in time, right spot, and not fighting that much. Like it seems like they can focus on themselves and they can define their business, yeah, because they are pioneer and leading it, and not like always second mover and this kind of stuff. They're first mover. It seems to me at least, and I love this. I love this when I invest in companies. And that was always a bit troubling for me at SentinelOne, that, yeah, maybe they are AI-driven, but the reality is, if you have a large customer base like CrowdStrike, and the market is already covered quite well, and they have way more money for reinvesting it for M&A and this kind of stuff, and research, of course, and in terms of sales and having a strong promotion marketing department, and then it is difficult to catch up as a smaller competitor, even though I think SentinelOne has definitely some space in the business, and there's enough cake existing, and who knows how SentinelOne will develop in the future. I cross my fingers for this company for sure, and maybe I reinvest into the future, who knows. But again, yeah, RUBRIK, I think, is way more positive attached in many of those aspects. And you can see it as well here in the results. It's positive at the end. The last quarter was already rated it positive. I very rarely rate positive the quarters or the earnings positive from companies I own. Most of the time, I'm not even maybe 25% of the earnings calls I experience. And RUBRIK already second one in a row in terms of positive performance. So that's quite outstanding and remarkable from my perspective. And whatever the price does tomorrow, if it drops further, I buy shares. If it recovers, I'm happy. If it stays on this level, I'm happy. I will do my best out of the situation, because this kind of results, at least for me, creates more conviction to me. Yeah, and I hope not some company out of nowhere, like a hyperscaler, copies them or whatsoever, but I assume that will not be the case. Then you write, the market didn't react, which is actually bullish, because so far we've seen when the market reacts, it decides to sell off no matter of the earnings. Yeah, sure. And again, before the earnings have been announced, the market right after hours dropped already to -4% or something like this. So it was already, the sentiment was already driven negative from the beginning, and it actually recovered since then. And again, if tomorrow is a positive day and hopefully stocks rise like today, my portfolio participate quite strongly today, even though I don't have AI. But yeah, then I think RUBRIK, it will turn out very positive as well for RUBRIK. Then you write, if you want to get 5x or 10x, your CEO needs to look the most like an action figure from the 80s movie. Yes, ServiceNow is perfect in this regard. For instance, yeah, that's true, man. yeah. I hear that. I read something like that. Beepool, the CEO of RUBRIK, is a bit more like so kind of esoteric or something like this, or it's like telling too much fairy tales. But I must say, the interviews I've listened to him and the earnings calls I've checked, I'm happy with his performance and in general of the management team, and the results speak for themselves, I think. Yeah. Okay, guys, now let's check out what is going on. Or let's go quickly through the slide deck, but very quickly, very quickly. I mean, most of the time there's not anything new. Not something really new. Again, subscription ARR 32% year on year. Why we complain about something and I mean, RUBRIK is not valued like completely nonsense. It's quite good valued, quite okay valued. You can see here cloud ARR 43%. That's awesome. Maybe I must add cloud ARR to the Excel sheet in the future. Better make a note. But I think on a certain point in time, it doesn't make that much difference anymore, because you can see it's only roughly 170 million difference, and this gap will get closed, and so it's not. Then we 20x. Yeah, man, that's nice. No, bedtime. Thanks so much for show, mate. But I'm dead tired. Yeah, I know this feeling. I need to jump into the bed as well at any moment. Appreciate that you joined, and appreciate that you have been active. I hope you join future earnings, live earnings as well. Always a pleasure to do this together with you. It always feel like you're my co-host. Sleep very, very well, man. I'm looking forward that you join next time, and thank you very much for participating that strongly. That helps me as an investor for sure. Helps the stream, help the others. That's very beneficial. Okay, then we have some sheets which are just updated or basically the same. Here's this flywheel, which you can see on your customers. Then more security products, more applications secured, more data from applications already secured. Yeah, so again, it's a data-driven business, not seat-based driven like other legacy cybersecurity companies. That's nice. That's nice. Subscription ARR growth, that's nice, because you can see, I mean, subscription was not a big thing. They made the shift really happen. It's more about that they make this here to success story that shows that how adaptable they are. Strong top line growth, revenue year-on-year, margin we already discussed. At least the non-GAAP margin, I mean, GAAP margin is lower by 1%, but the non-GAAP margin increased by 1%. That's nice to see. That is lovely. Yeah, guidance was very strong, I think. What we have here. Material rights, non-recurring revenue. Yeah, they already adjusted a bit, as you can see here. But that's for me at least not a big aspect. Okay, then we expect to see 45% of net new subscription ARR in the first half of 2027 and 55% of the second half. Yeah, it's always a bit backloaded. Expect that Q2 2027, 19% of the full year net new subscription ARR. Okay, that's quite low. I think now it was like 23% or something like this, 24%. And now only 19%, which means that Q3 and Q4 will be very strong, very likely. We expect Q2 subscription ARR contribution margin will be down Q-on-Q from Q1 due to the timing of expenses. We expect subscription ARR contribution margin to move modestly higher sequentially in Q3 and then higher in Q4. Okay, so it seems like Q4 will truly be the outstanding quarter. We expect to see 35 to 40% of free cash flow in the first half of 27 and 60 to 65% second half. Okay, so there's really a lot coming. Okay, guys, now we check out what is going on with first market reactions on Seeking Alpha investment platform, where I'm full paid member. I can strongly recommend it to you. And there are only 4 comments, as you can see here, and we check them out together. Start with the first one. Smurfy writes, loved all the numbers except for one. Q1 non-GAAP EPS was $0.16. The guide for the year is only 25 to 30 US cents. Granted, this was a huge jump from the guidance given Q4, so they could raise it again, but it does raise a red flag that next 3 quarters total EPS guide is less than what they did in Q1. Yeah, again, might be the case, but I assume they actually readjust 2 more times the guidance for 2027. So every time they adjust it, and will not end in this range. That's my expectation. Positives is they lowered the guidance for shares outstanding by 1.7% to 228 million. Yeah, that is what we talked about. Also increased free cash flow guide from 27 million to almost 300. That's nice. Yeah, the guidance in general is lovely, and I think that they will keep this through the whole year. Underlying business looks healthy. Stock price is completely at the whim of what premium the market is willing to pay. Yeah, and okay, I think it's actually undervalued a bit for sure, from my perspective, and I'm very looking forward to the next days and to the analyst day. Maybe they will announce something interesting whatsoever. Yeah. They write 228 million shares, about 10% increase from current share count. Yeah, it's actually almost even more, but that's not new, and it's not surprising. It's just the status the company is in. It's a freshly IPO'd company. It's a SaaS company. It's a growing company, and it was already priced in somehow. Yeah, and they lower it. That's for sure, I think, not priced in. Smurfy, right, in Q4 they get full year 2027 share count of 232 million. Now they lowered it to 228 million. Yeah, that's what we talked about. That's why I said they lowered the guidance. But yes, that is over 20%, 12% higher than today's count of 203 million. The Q4 guide was for 204 million in Q1, and now the Q2 guide is 224. So they should be 20 million shares dropping this current quarter. Yeah, makes perfect sense. Then roll with the AK writes, good quarter, good guidance. I will be adding more. Yeah, and I see it the same way. I mean, I already added yesterday evening. But let's see. I mean, if it sticks to this level, I add not more because I already have very full position with 57,000 US dollars or something like this, or almost 800 shares, I think. But yeah, anyhow, I assume they will increase. The price will recover. Same like RUBRIK recovers data, the price will recover tomorrow. That's my assumption, at least, if the overall stock market increase, and yeah, then everything will be fine. Guys, that was it for today. I mean, I really hoped that you liked what you have seen. Again, the rating was positive. I showed one more time to you, as you can see here. Top line, bottom line growth positive. Company specific and cybersecurity specific parameters solid, very solid, and future guidance quite strong. Everything was adjusted into a positive way. Not surprising, but it happened. So I left a positive rating. I hope you enjoyed what you've seen here, guys, and not sure. I mean, if you did, then feel free, guys, really, to give something good to the world, give something good back to me, and like the stream, subscribe to my YouTube account. That would be lovely. Then you will miss the next earnings calls. But even if it's not about this, would be just very nice if you bring some smile to me, if you subscribe to the channel. And of course, you can follow me as well on Instagram, A Sense of Capital. It's linked as well in the description of this video. Guys, that was it today. Thank you very much for joining. That was the last live earnings experience with me for this season. Next one will start, not sure, in 2 months or something like this. Very likely with Reddit. Reddit already grow very strongly stock price yesterday, so hope it keeps growing till then and developing strongly. I'm quite confident. I hope I will see every one of you or talk to every one of you who already joined next earnings season. Guys, again, feel free to like and subscribe. And a quick disclaimer as always at the end. In the past 3 hours and 1 minute and 36 seconds, that was not financial advice, no consultation, yeah? So, and no guarantee of correctness for the provided data. So make your own research, do your own due diligence, make your own investment decision. It's your own money, your own future. You need to live with the result of it, yeah? And more important than investing is being healthy, have a healthy social environment, be mentally healthy, physically healthy. So take care of yourself. Money is not everything, yeah? Guys, it was a pleasure. Cheers and bye-bye. A sense of capital.